All right, yo, what's up for everyone on the replay? Hope you're having a good day. Specifically today, it looks like AI stocks are tanking. I'm going to go deep dive into some of my favorite AI stocks to buy the dip on. But first, let me start with the stock portfolio update because our Moomoo portfolio is tanking today. We are down 1600 bucks or 3.5%. And these are the stocks that we got in here. We just got 6 companies in here. We keep it simple. Actually, one of our companies, Coca-Cola Consolidated, the bottler, it's kind of seen as like AI proof whenever tech stocks are doing bad. Usually Coca-Cola's doing good and they're doing great. They're up 5% on the day. But then we got our AI names like our Comfort Systems. They are down 6% on the day. Powell Industries is down 6.67%. Actually, let me just go to my watch list right here. This is insane. And honestly, valuations are starting to look dog cheap, even on my Comfort Systems. But yeah, Micron's down to 820 bucks. Amcor, SAN, Corning is down 15%. That was the main loser today. Corning, GLW stock. I can't wait for Amphenol earnings, ticker symbol APH. I've always said that that's their superior fiber optics play there. But anyway, yeah, here's my Webull portfolio. On the day, we are down 0.64%. Not too bad, but open profit and loss since inception, we are up 21 or 29% all time in here. And these are the stocks that are green on the day. I've been shilling Moeller Industries and a bit of Netflix and Microsoft, and those stocks are doing great today. Moeller's up 3, Netflix 4, Microsoft 2.5. And then let's see what's down on the day. Yeah, AMD's getting cooked. AMD's down 7%, and that's really it. Our Power Solutions is down 7. Ouster's down 5%. But yeah, actually, this portfolio isn't doing too bad. And then surprisingly, our Robinhood portfolios are green on the day, both our dividend only and our Roth IRA. Oh, come on, Robinhood. Robinhood gives me issues whenever I screencast. Yeah, on the day, we're up 0.24%. Year to date, we are still down 1%. And from 1 year ago exactly, we're only up 3%. So this account has definitely underperformed the market. But yeah, we also keep it simple in here. We just got 7 stocks. And here is our lifetime percent change on every stock. The only company we're down on lifetime is McDonald's, which if you look at all the food stocks, the GLP-1 weight loss prescriptions are really starting to hurt these companies. Hey, what's up, Plasma, Mike, and Isaiah? Good to see everyone. Hope y'all having a good day. I know the market's a little red today, but that gives us a good chance to buy the dip on some great companies. And then surprisingly, our Roth IRA is doing great. It's up 2.4%. We've kind of built our Roth IRA around wanting defensive names. Like we got HCA Healthcare. This is the largest non-governmental hospital group. Cavco that does factory-built housing, which is, I think, a better industry than normal, like a Lennar, a home builder. We also got Care Trust REIT, which is a senior housing care triple net lease REIT, which is pretty cool. That has a 3% dividend. So yeah, those are all our portfolios. Now let's see what stocks y'all have to say, which ones we could buy the dip on. And I see AMKR. Yeah, that one actually, let's go deep dive into their earnings and then we can look at Micron too. I was super surprised. Like they should not have fallen this much. Amcor is down 24% on the day. And I really haven't deep dive into their earnings. So I'm going to go give this a quick glance. So here is their earnings. So they beat on revenue, they beat on net income, they beat on EPS and on EBIT. So it was a quadruple beat quarter. And wow, like how much cheaper can they get? I don't think much cheaper. They trade at 20 times net income and only 16 times next year's net income. That's what the forward PE means. They only trade at 16 times next year's net income. Maybe Plasma can give me a little more detail here, but I'm pretty sure they just had a big NVIDIA partnership. But look at this margin expansion they had this quarter. The revenue, the sales grew by 27%. And then net income grew by 284%. And that's real net income. You know, before tax, they made 100 million. Then after tax, after interest, they kept 83 million. Their net margin grew 200% year over year. So nice little margin expansion, pricing power on Amcor. I don't know why they fell specifically. Did they give like bad guidance or something? I don't know. But I just think it's odd that they're falling so much. I know we also had Corning earnings. This is the company, if you didn't know, that makes Gorilla Glass for Apple. They supply fiber optics to NVIDIA as well, I believe. Let's see what happened here. So, Corning CEO details optical scale up and massive photonic strategy for data centers. Well, where's the bad news? Because they're down 15% on the day, but they rose Q3 guidance. Huh. EPS, core EPS of 89 cents, slightly below expectations. Capacity constraints on AI optical fiber and smartphone weakness are some headwinds. So maybe they had some smartphone weakness, something like that. I don't know. It's a pretty interesting company. They manufacture Gorilla Glass for Apple. Morningstar says they're undervalued now. Robust optical fiber demand driven by AI infrastructure buildouts, a durable cost advantage, and highly integrated customer relationships will drive long-term value growth. They are a little bit expensive, it looks like. They trade at 36 times next year's net income. But if you're looking for exposure to optical fiber for chips and also, I guess, Gorilla Glass, you could check them out, which is pretty cool. Do you use Robinhood Manage account? I do use Robinhood, but I don't. I build my own portfolios. I don't let them manage one for me. I know what you're talking about, though. They have all these like different things here, but yeah, I just have a typical normal taxable account, and I also have a Roth IRA with Robinhood. But yeah, basically, this is my portfolio where every stock in here pays a dividend. At heart, I'm really a dividend investor. I love dividend stocks. So Fernando says, "Why is SoFi such a good company, but their stock is terrible?" So actually, this that frequently happens. There's a disconnect between the stock price and the actual fundamentals. If we look at SoFi the past year, I think you'll notice something very similar when we compare that to the price of Bitcoin. SoFi isn't missing on their financials. They're not reporting bad numbers. They're actually beating on expectations. It's just following the sentiment around Bitcoin because a lot of their fees come from Bitcoin transactions. But look at Bitcoin from 1 year ago exactly. This is the rough part. Bitcoin was 1 year ago 123K. Now it's 63K. Actually, I just read an article. The average retail investor is now down on their Bitcoin position, which is unfortunate. It's actually performed worse over the past 5 years than every traditional asset like gold, silver, S&P, stocks, and even bonds, actually. But I'm a believer that when Bitcoin starts to rally again, SoFi is going to rally even faster. And even if Bitcoin doesn't rally again, SoFi, I believe, will still recover. Not financial advice, of course, but let me share with you what I see around SoFi. I judge them off the financials, and they have really good ones. So if we go to their main business lending right here, and this is like half the revenue right here, 58% of their total revenue. This would load here. Yeah, there we go. It's up 55% year over year. That is the fastest growth rate on the entire screen. It's like the growth rate is re-accelerating. So lending business is up 55% year over year. The other half of the business, their financial services, even more incredible growth. Up 41% year over year, after grew 101, after grew 85, after grew 244. And that's the thing, they're not missing on expectations. Look at this orange line. The orange line is what analysts predict. The blue line is what they actually do. They beat on revenue the past 3 quarters in a row. They beat on net income. And look at the net income forecast. They are about to hit 240 million of net income. It has never been over 240 million before. There was this one quarter, but this was a gap one-time adjustment. So they're literally about to hit record EPS. There is still massive EPS growth on SoFi to come, literally in just 2 quarters. So some people say SoFi is overvalued. They look at the trailing 12 months PE ratio. They say they trade at 37 times net income. But that's not how you should value SoFi. You should do a forward PE because there's so much growth happening in just 2 quarters. They only trade at 23 times next year's net income. In my opinion, that is dog cheap. It's literally cheaper than the S&P 500, and that's why I actually own SoFi, and I just bought a little bit more SoFi here in my Webull portfolio. So, of course, I'm a little biased here, but I really like SoFi. 23 forward PE. I think we're just seeing a little trend because of Bitcoin. Maintains hold on SoFi amid rising loan losses. Yeah, SoFi does a lot of loans. Anyway, I'm a fan of SoFi. What app are you using, please? Hey, I'm actually on a brokerage. It's just like, E-Trade or Charles Schwab. I actually have it linked in my profile bio there if you'd like to check it out. Or you can type it into Google, Moomoo. But actually, it's an affiliate link. So if you check it out with that link and you end up depositing $100, we both get like a free stock. But it's a completely free app, costs nothing. Ooh, someone said CoreWeave. That one I'd be a little cautious with. That's a big NVIDIA holding. If you didn't know, these like if your net worth is over 100 million, you have to disclose all your trades by SEC law. That's why we get like Leopold, Nancy Pelosi's, Buffett's, and a ton of these super investor portfolio. But NVIDIA is so big, the actual company, they own a bunch of individual stocks, and their second largest holding behind Intel is CoreWeave. So I don't mean to be bearish, but this is the one part of AI that I really don't want exposure to. This is not the picks and shovels play. If you're wondering what is this stock, they rent out GPUs. Literally, I kid you not, all they do is they own a bunch of NVIDIA chips and they rent out these NVIDIA chips to a bunch of customers, cloud people. The unfortunate part is this is, no moat, no barrier to entry, super commoditized and money losing business. And I don't mean to just pick on CoreWeave. It's kind of the entire industry. You look at Nebius. You look at Iris Energy, they are big money losers. And look at these net income forecasts. I'm a person who loves companies that make free cash flow and make net income. Well, like respectfully, I mean, like look at these net income numbers. They're supposed to they lost 740 million this quarter. They're going to lose 780 million next quarter, 750 million net income the quarter after. And look at these negative 5 bill of free cash flow, 2.5 bill, 700 mil. This is honestly not the kind of company I want to own. And because I can't even value this stock. There is no forward PE, there is no free cash flow yield. That's why, honestly, this one has probably a lot of downside potential. So I would honestly be cautious with this one. They have good revenue growth, but they're growing revenue in worsening losses at a faster rate. So that's how you know this is a super commoditized, highly competitive, money losing industry. So yeah, actually, sadly, I would not really touch CoreWeave or Nebius, but you know who I would actually own is the picks and shovels play. I want to own the company that's selling the chips to CoreWeave, and that would be Nvidia. And you guys won't believe this. Nvidia is honestly undervalued, in my opinion. Some people will see this chart and say, no, there's no way I'm going to buy Nvidia. But hear me out on this. This is what's pretty fascinating. Did you know Nvidia only trades at a 19.5 forward PE, which means they trade at 19 times next year's net income? That's why we're not in some peak bubble. Valuations are cheap. Google's at 23 forward PE, Microsoft's at 21, Meta's at a 20, Nvidia's at a 19. This is nothing like the dot-com bubble. Valuations are cheap. You know, they sell GPUs, and Morningstar even says they're undervalued. Exponential growth in data center CapEx, high switching cost associated with its proprietary CUDA software, and continuous innovation in AI infrastructure will drive long-term value growth. Let's see if there's any news here. NVIDIA discloses Vera CPU specifications. Okay. NVIDIA invests in safe superintelligence, GPU access. Well, anyway, here's a bunch of news around NVIDIA. Anyway, what's the bad news? Is there any bad news right here? Oh yeah, Alphabet begins to direct TPU system sales to customer data centers. So Google's making their own TPUs. NVIDIA raises GPU bundle price and delays the RTX 50 super launch amid memory cost surge. NVIDIA faces scrutiny over OpenAI finance talk and AI demand. So yeah, they're kind of backing up OpenAI, which I'm not a fan of. But anyway, 19 forward PE on NVIDIA, and look at these net income forecasts. These are real. This is after tax too. They're supposed to make 51 billion in net income next quarter and 57 billion in net income the quarter after. There is still like 50% plus net income growth for this company. And look at the net margins. Nvidia basically just collects royalties. They have a 60 to 70% net margin. So for every $100 that comes in, they basically keep $65 after tax. And they just rose their dividend to 0.5%. So anyway, that's the picks and shovels play I like. And instead of just owning Nvidia, own the whole AI ecosystem. Like I do. I own Comfort Systems that does the complex MEP work and HVAC work. Powell Industries that does also MEP work, mechanical, electrical, plumbing work specifically for data centers. And they also do switchgear solutions for the grid. Well, you can own Amphenol that provides the copper cables and fiber optics to NVIDIA and Google. They're both big customers in them. We can also own CEG that owns over 30% of all the US's active nuclear reactors, powering data centers. You can own the companies constructing the data centers like United Rentals and Caterpillar. Own the ones making the backup diesel turbines under every data center like GE Vernova or Broadcom that makes the custom TPUs for Google. Like there's so many great ways to play AI. Oh, what's up, Isaiah? He said NOC stock. That's Northrop Grumman. This is an aerospace and defense stock. So if war fears start to escalate again, this is a nice stock to own. Let's see if there's any news. So okay, reports revenue up 5%, raises full year guidance on record $105 billion backlog. Wow, that's, invaluable when you have a $100 billion plus backlog. What's the whole company worth? The whole company's worth $78 billion, and they have a backlog bigger than the whole market cap. Northrop Grumman completes Pentagon qualifications to produce Patriot missile rocket motors. Northrop Grumman awarded $1.2 billion U.S. Navy contract for three E-2D advanced Hawkeye aircraft. Sounds interesting. Well, anyway, I think one of the reasons why the stock trades so cheap, if we look at the valuation, they trade at 18 times net income. That is honestly super, that's cheap. I think it's because they kind of grow like mid to low single digits. If we zoom out on the revenue right here, it doesn't grow too fast. Like revenue's up 5% this quarter, 4%, 4, 1, 9. So we kind of want to see the growth rate start to pick up a little bit. And it looks like the margins did fall a little bit. That's something to look into. Revenue's up 5. but net income fell by 6, which means the net margin did slip up a little bit. Yeah, gross margin fell by 8, net margin fell by 11. Maybe that was a one-time adjustment, I don't know, but it actually beat expectations. Honestly, I don't see anything wrong with this stock besides maybe a slow growth rate of the revenue, but still, I mean, they beat on expectations. They're going to make over a billion in net income every quarter, $100+ billion backlog. They do aeronautics systems, mission systems, space, and defense systems. Huh. And it's a nice dividend payer. You get basically 2% of your money back just in a qualified dividend. What's a backlog? Yeah, that's it. Like literally, it means like your backlog of orders. It's orders you have that you haven't fulfilled yet. Okay, hey, what's up, GOH? And let's see what's next here. BE, please. What's the PE on Tesla? You don't want to know. That's actually why I kind of it Tesla to me like I know it's a popular stock and a lot of people love it. So this is the unpopular opinion, but I can't own Tesla. The valuation is ridiculous. If we look at the valuation, Tesla trades. You ready for this? They trade at 283 times net income, and they trade at 275 times next year's net income. It is literally, I think, the most overvalued stock in the market, and they just had their worst quarterly profit in over 20 quarters. Look at this. They only did 398 million of profits of net income. It hasn't been that worse since 2020. It's like literally 2020. So that's they lost their growth story, and that's why they tanked 20%. And I think they're going to continue to downtrend. I just be careful on them. BE, please. Okay, Bloom Energy. Okay, let's check this one out. Yikes, they're down 15% of the day. Yeah, specifically AI stocks are tanking today. We're gonna look at some interesting ones like Amphenol and Comfort Systems. So here is Bloom Energy. They do the fuel cell technology. Did they report earnings or is it just momentum today? Earnings preview. What are their earnings? July 28th. Okay, wait a minute. Are the earnings already out or is it after a post market? Okay, so after the bell. So if you buy the stock now, you're kind of betting on earnings, but they report earnings in 2 hours. So earnings preview, analysts expect 310% EPS growth. Okay. Okay. So this is what they're about to report. Again, if you buy them now, you're kind of betting on earnings. But look at this. This is why I'm actually really bullish. Notice last quarter, analysts expected 540 mil of revenue. They did 750. And that wasn't just a beat on revenue, it was a big beat on net income. I'm talking massive beat. They were expected to lose 600,000 and they made 70 million. And that wasn't like some gap one-time adjustment accounting fluke. That was real even on EBITDA, which you can't, fluke. They expected 14 mil, they did 72 mil. So last quarter was an insane beat and that's why they gapped up so much, but I am still a little cautious because they're just now getting net income positive for the first time ever. Like they're still at a negative PE, but when we value them off next year's net income, they traded 80 times next year's net income. So we're really just waiting for earnings here. But yeah, look at this triple digit revenue growth, 130% growth. And it looks like analysts are forecasted to continue to see that. I bet you, even though the stock's, kind of expensive, it's because they're just now getting net income positive. If they pull off another big beat like this, I'm sure the stock will do great. But yeah, they're already down 15%. That's because most AI stocks are down on the day. They had like Corning and Amcor and SANM. Micron's down 10%. So Modine is down 8%. I wonder how MCOR is doing. I bet MCOR is a steal. Oh my goodness, let me check. EME, one of my favorite stocks. Yo, I might actually buy this stock. Like, I'm not kidding. 24 forward PE, HVAC, MEP company for specifically data centers. Kind of like my main holding, Comfort Systems right here. I just love that industry. All right. Hey, what's up, Japan? He says, your recommendation on KNSA and it has done crazy today. Yeah, I kicked myself for not buying this stock. I even was recommending this stock while they're at an all-time high. This is one of my favorite pharmaceutical stocks because they genuinely have great financials and they're still undervalued. What's the valuation? Oh, actually, never mind. They look a bit expensive. 40, well, after its 25% rally. Before today, they were very inexpensive. But yeah, I won't really do a deep dive into this one, but they have quality financials, growing revenue and net income even faster with a monster balance sheet. Yeah, dang, that's a great stock. Hey, what's up, Eradicator? I'm interested to see how the market reacts to Microsoft and Amazon this week. Dude, me too. That's a great point. So if you guys don't know, we get the biggest earnings ever in 2 days. So today we get, pay, or actually we already got these, but we get Visa, S&P, or no, S&P Global's out. What about the aftermarket, like Waste Management? Ooh, Waste Management. This is one of the top stocks in the market. It's always the boring stocks that do really good. Kind of AI proof your portfolio with Waste Management. You can't AI can't take over throwing away your trash. And this has been a steady compounder. Bill Gates owns 8% of the company, or the Bill and Melinda Gates Foundation. But yeah, anyway, Tuesday or Wednesday's the big day. Tomorrow we get Amphenol, Microsoft, Meta, SoFi, Robinhood. Then the day after we get Amazon, Reddit. Like we get some crazy earnings this week. I'm so excited. All right, so you think MCOR could get to the fixed price or like actual individual stock price? I don't know. They like to do stock splits. Maybe you mean market cap. Yeah, they're a $31 billion company. Comfort Systems had to sell off a bunch of its subsidiaries to MCOR back in 2008 just to stay afloat. Yeah, MCOR's a great stock. Way cheaper than hey, if you have a stock, please give me the ticker symbol. Like I see someone say Enterprise Gas and some other stocks. I'm not sure what those are. Graco. Yeah, please give me the ticker symbol and we'll check it out. Sorry if I'm missing some. I see a lot of great suggestions. So your auntie says CRDO. I freaking love Kratos stock. Hey, what's up, Charles and Ant? What's up, man? Good to see you. Hey, we deep dived to Amcor as the very first stock that we looked at on the stream. So if you have another stock you want me to look at, let me know. But you actually, if you want, you can like rewind the stream on YouTube. Okay, so here's Credo Technologies. This is a company that provides fiber optics and copper cables to NVIDIA. Is there any specific news here? Dang, no news on them. Okay, anyway, this has honestly the best financials, like growth I've like ever seen from a stock. Just check this out. Revenue has grown triple digits for the past 7 quarters in a row. Like revenue's up 157, last quarter grew 200, 200, 200, 170. Insane revenue growth. So not just revenue growth, but also net income growth. The net income, so on this 437 mil of revenue, they kept after tax 169 million, up 300%. The net income grew even faster than the revenue. That means pricing power and margin expansion. Their net margin went from a 21% to a 38. This literally has the DNA of a multi-bagger. I mean, this is like insane. And so for every $100 that comes in, they're keeping $38 after tax. And at this triple digit growth rate, what's it going to be the same time next year? Another thing that takes a tremendous amount of risk off the table is when a company literally has no debt. Look at this balance sheet, man. They got $1.44 billion of cash, no debt at all. They don't owe anyone any money. The free cash flow, oh my goodness. This is just literally a money printer. So anyway, see if there's any news up here around them. AI data center connectivity solutions drove significant revenue growth, supported by major customer demand and expanding product. So yeah, they do copper and optical products for basically the cabling for data centers. My favorite copper cable provider is actually Amphenol stock, and they report earnings in 2 days. Or wait, no, tomorrow. They report earnings tomorrow. So yeah, Morningstar says, well, not to get off topic here, but that Kratos stock traded at, I should have pulled up the valuation. They traded at like 40 times next year's net income. This stock only trades at 26 times next year's net income. Amphenol is still cheap. Morningstar says they're undervalued. Massive demand from artificial intelligence infrastructure investments for its best of breed data center connectors, combined with a highly flexible operating model, will drive long-term value growth. I totally agree. I've been loading up the boat on this stock. Those B's, those are my buy orders. I keep buying this stock because I want to own the AI like picks and shovels play. And Credo, Amphenol, Corning, they could all, I all consider them. Hey, what's up, Joe? How do we get into oil? Well, the best way, honestly, the best total return oil stock has actually been just ExxonMobil. But even when you zoom out, I mean, they're not like crazy up from their 2014 price. This is the thing. Oil is not the kind of stock to outperform the tech-heavy S&P 500. Actually, matter of fact, you will not beat the S&P 500 owning any sort of oil stock, but you're not owning it for that reason. You're owning it for its defense and its safe haven type nature, where if inflation fears start to escalate, war fears start to escalate, oil does good in those environments. And in the meantime, while you hold on to this for its defense, you get basically 2.5 to, or actually 3% of your money back a year just in a dividend. And they trade, oil stocks usually trade cheap. They trade at only 12 times next year's net income. They do massive share buybacks too. So I am curious to see. The forecast on this is amazing. I mean, look at net income. Next quarter, they're going to do 14 bill in net income, 14 bill the quarter after. If we zoom out, has it ever been that high? They have, okay, only other time it was that high was in 2022, and they made 20 billion during the inflation fears, but wow. Anyway, ExxonMobil is a way that you can play oil. I mean, honestly, Powell Industries, 40% of their customers are oil and gas customers. So honestly, how about Kodiak Gas? Actually, this one I really like. KGS stock right here. What's their forward PE? A 22 forward PE. They're actually really nichey and interesting. Okay. What are your current six holdings? Well, hey, actually, actually, I got way more holdings than that. Hey, thanks again for all the gifts there. I can't pronounce your name there, but thanks for that little heart there. And Joe for the 15 roses. I appreciate that. But these are the six stocks that I own in here. This is my portfolio called buy and never sell, where once I buy a stock in here, I'm literally never allowed to sell it. Like, even though I'm up 600% and 300%, I'm not allowed to trim or sell a single share. But in my other portfolios, I don't have the same rule. Like, this is actually my dividend only portfolio. That's what I call it in the top left. Every stock in here pays a dividend. And then I have a Webull portfolio. I know I got way too many holdings. I got way too many stocks. But yeah, I love being fully transparent. If you got any questions, let me know. Like, here's our open profit and loss. We're only up 28% or 4,300 bucks all time in here. This account has been our best performer though. We're up 27K all time. Even though we're down 1,900 bucks on the day, I'm not worried. I'm actually ready to buy the dip. Okay, Burner says SKHY. SKHY. Hey, maybe we'll look at Iris Synergy. That one is not good. Um, but yeah, let's see what's next here. Now is looking tasty. I fully expect the market to dip hard this week. Hey, yeah. So what's that thoughts on BBAI? That one I don't know. Anyway, this is SK Hynix. This is that Korean um memory stock. I wonder if there's okay. There's a lot of good news. I heard, yeah, Nvidia and SK signed $500 billion plus AI infrastructure partnership for long-term memory supply. Wow. Anyway, check out SK Hynix. This is why it's tough to be bearish. I mean, they traded 5 times next year's net income. Literally, like, this isn't peak bubble valuation to me. They traded 18 times net income, 5 times next year's net income. And look at these forecasts. They're going to make, and this is in US dollars, we've converted it. They're going to make 34 billion net income next quarter and 45 billion the quarter after. That is insane. But here's the thesis here. They sell a commodity memory right now, DRAM, for a 76% net margin. They're not going to be able to keep that up forever. There's a short term, or who knows how long this shortage is going to be. But the thesis is 2028, 2029 is going to be peak ever net income earnings for them as the supply chain starts to fix themselves. And, the people just aren't buying memory at this margin. So, but I bet they're still going to do good. This is a short to medium term play. I bet they'll still do good for the next year to 2 years. But then this is not, in my opinion, a buy and never sell type stock. But yeah. Anyway, that's the Korean Micron. Pretty interesting. So, what's next? Please check. Hey, I'm not sure what you're talking about there, Motive. If you had a stock you want me to look at, give me the ticker symbol. We can check it out. MMS is climbing back slowly. Okay. I'll give you my thoughts on Iris Energy after this. I'm seeing multiple people ask about Iris Energy. Sadly, I don't have anything good to say about it, but I got to give you a realistic warning. It's my duty. So, anyway, here's a different stock, though. This is MMS Maximus. I've actually never heard of this stock. This stock is actually lower than their 2015 price. So that's not great. This has not been a great stock to hold for the past 10 years. But they do, they're really cheap. They trade at 9 times net income, 7 times next year's net income. Program operations, that's down 7% year over year. Clinical service, well, that's up 5% year over year. When we combine all their businesses together, yeah, revenue actually fell for, like, the sales, the lifeblood of the company is actually negative 4%, after it only grew 1%. So if we just zoom out on the revenue, I can kind of see why this stock is underperformed. I mean, the net income's kind of choppy, but I mean, they're still net income positive every quarter. They're easily making like 80, 90 million in net income a quarter. Yeah, they're going to make 100 mil next quarter, 109 mil the quarter after. I think, yeah, they've just been missing on top line growth. Like, look at that. The orange line is what analysts expect. They've missed on revenue for the past 3 quarters in a row. Like, I don't think analysts were forecasting them to revenue to go 4%, negative 4% last quarter. So, yeah, honestly, it's probably like the worst is already priced in. I mean, it's lower than they were 11 years ago in stock price. So maybe the worst is fully priced in. And honestly, companies that have like negative revenue, they usually do trade around like a 10 times PE. Can you elaborate your holdings? Hey, I have a bunch of in-depth YouTube videos where I deep dive sharing with you my entire portfolio and why I own every single stock. I think you'd, hey, actually, that's the only way to support me. Yeah, please watch out for people impersonating me. I just had to ban someone with the same name and picture as me. I sell nothing. I have no course book. I don't teach or coach. There's no way to learn from me except watching these free streams. But the only way to support me, and it would mean more than a donation, would be to just check out my YouTube channel. Just subscribe to my YouTube channel. You just type into YouTube Nathan Robert, you'll find it. I'm also streaming on there right now, and you can like replay it if you missed anything or if I talk too fast, people say. So here's my warning on Iris Energy. This is not the picks and shovels AI play that I would want to own. What does this company do? They own an insane amount of NVIDIA chips. They own a bunch of GPUs. And what do they do with those GPUs? Well, mainly they mine Bitcoin. Okay, Wi-Fi, can we like work here, please? Maybe I'll have to reset the app real quick. Oh, okay, maybe not. Okay, here's the thing. Still, as of 2026 Q3 or fiscal Q3, 76% of their revenue is Bitcoin mining revenue. So that's what they do with their GPUs. They mine Bitcoin. And what's the other part of the business? Well, they're starting to rent out GPUs to cloud companies. So they're trying to be a neo cloud. But here's the thing that what they do is no barrier to entry, no moat, super commoditized. Everyone's doing it. Meta just got into GPU renting. And so that's why I'm really scared of this stock, or I personally wouldn't own it. I want to own companies that make net income and make free cash flow. But look at this right here. They lost 250 mil this quarter. They're going to lose 192 million next quarter, 166 mil in net income the quarter after that. The free cash flow was negative 1.3 bill, negative 800 mil. So they're a big net income loser and revenue loser. So if we go to the forward PE, there is no forward PE. There is no, free cash flow yield to really analyze this company on. So that's the one part that I'm scared of. No barrier to entry, no moat, no forward PE, no free cash flow or negative free cash flow, negative net income. They've even kind of propped up because Nvidia owns a big stake in them. There's this whole circular finance thesis and also this depreciation of the chip thesis where every 3 years you need new chips. So there's the big depreciation thesis to look into. Anyway, point being, not to be too bearish, they'll probably do good through the end of the decade. I don't know, but that's not a good long-term hold in my opinion. All right, so PSKY. Hey, is that Paramount Skydance? Yeah, this is the company that's trying to buy Warner Bros. Discovery. And dang, they're at an all-time low. If you've ever bought this stock, you are down on your position. That is super unfortunate. Let's see, is there any news? Actually, I've like never analyzed this stock. I've never even looked at it. So yeah, they do TV media, direct to consumer streaming. I mean, the net income forecasts look good. They're gonna make 150 mil next quarter, 200 million the quarter after. So, good net income expectations. I think there's just there's a lot of fears around them not being able to actually acquire Warner Bros. Discovery. I've heard about that. WBD is who they're trying to buy, Warner Bros. Discovery. Let's see here. Paramount Skydance $110 billion acquisition of Warner Bros. Faces antitrust hurdles. EU conditionally approves deal. So yeah, anyway, they're trying to buy this stock out for over like $35 a share. And as you can see, it's slowly getting off that because the odds of them being able to acquire them are actually going down. So that gets priced into the stock. So anyway, that's really what you want to watch there. And Low Man, dude, I'm actually going to give you a follow. Thanks. You said I subscribed to your YouTube. Dude, thank you so much. I greatly appreciate that. I'm trying to build out my YouTube, so I really appreciate that. All right, and I am reading both the YouTube and TikTok chats. So again, I apologize if I miss out on some of the stocks. I'm trying to get to everybody's. I'm only looking at one. Like if one person says a stock twice, I'm only going to look at their stock once, just so I can get to all the new people in here. Thanks again for showing up. I try and stream every day if you guys wanted the follow button. So KC says EPD. There's one thing I've looked at this stock before. This is actually an MLP, which stands for a Masted Limited Partnership. Technically, when you buy this, you're not buying shares. You actually become a partner in the company, and they send you a K-1 tax form. How do I know this? Because I accidentally, in my first year investing, bought 2 MLPs because they have high dividend yields. I'm like, hey, I'll take a 5.6% dividend, but they have a high dividend because of how they're structured. So you're literally a partner in the company, so they send you a K-1 tax form, which is notoriously complicated. Costed me $300 with an accountant to get it filled out. So I personally would stay away from EPD. Even if you own it in a Roth IRA, you still get the K-1 tax form. So what does this company do? They own 90% of their assets are natural gas pipelines. So they own a bunch of pipelines. So Anyway, that and technically they're below their 2014 price, but you're really buying this one to maximize your dividend income. You get the 5.8% dividend yield every year, and you kind of hope for just 1 or 2% stock price appreciation on top of that. But they really haven't had that as they're kind of lower than their 2014 price. So hopefully that was kind of helpful there. I'd just be worried about how to recognize MLPs. Well, that's a great question. If it's in the oil and gas midstream sector, yeah. Oh, they'll have LP next to their name, or MLP, or a limited partnership LP next to their name. That's how you know. And they always disclose on their website what kind of tax form they send you. You want the normal 1099, which that's what every stock sends. That's every single stock that I own pays a 1099 instead of a K1. Okay. And if only stocks that are K1s, here's a cool way. Actually, here's a life hack. You can own MLPX, which owns all the MLPs and doesn't give you a K1 tax form. So, like the biggest K1 taxpayer by market cap is Energy Transfer, ET. Yeah, these are all the main MLPs. Kinder Morgan. All right. Ooh. SAP is ripping share buyback inbound. Yeah, I heard it. Anyone heard of SAP before? It's like a European company. Let's see what the news was. SAP launches second tranche of $2.6 billion under 10 billion euro buyback. 10 billion, that's 5% of the whole company when you're worth 208 billion and you buy back 10 bill. So SAP reports cloud revenue surges 24%, operating profit guidance trimmed a little bit on acquisition dilution. Well, that's all right. Yeah, cloud business rose 24%. And backlog grew 26% year over year. Do we get I love the AI earnings overview. If we can pull that up, please. Oh yeah, here we go. Is this like what this is down here? Oh, anyway. AI strategy integrated with over 90% of top deals, including data, AI, and cloud. Okay. Anyway, Morningstar says they're undervalued. Successful transition of its legacy user base to cloud ERP, highly sticky, mission-critical enterprise software, and accelerating cloud backlog will drive long-term value growth. So maybe it's a cloud play. 21 times forward PE, or only 21 times next year's net income. Yeah, they crushed earnings. Wow. The orange line is what the net income was expected. The blue line is what they actually report. Big beat on net income. And last quarter and the quarter before. So maybe that's why they gapped up, 5% on the day. They actually software, yeah, look at that. Specifically, software is doing great today. Actually, let me pull that up real quick. Like Adobe, Salesforce. Well, actually, that's not the best watch list I should pull up. Anyway, it seems like software is recovering today. Really, the stocks that have been beaten down lately are the ones that are recovering today. Hey, Coca-Cola Consolidated, it's doing pretty good. All right. Let's see what's next here. Celsius. Yeah, let's do Celsius. Then we can do what's up, Cinnamore? He says Micron. Let's do Micron because that's like the third time I've seen Micron and I forgot to get to it. And then we'll do Celsius if you remind me after this. So what is Micron? This is, of course, your memory shortage stock, your DRAM. What is this? Oh, yeah, China just had their biggest ever IPO. It's actually China's most valuable company. It's CXMT. I don't know if they're still, or yeah, they're worth, we convert this to US dollars. China's biggest company is worth now $500 billion. This is China's biggest stock by market cap. So there's just been a recent Chinese IPO. China CMXT 500 bill valuation as Apple tests its DRAM chips. So even Apple is buying their chips. So that threatens Micron's market share. Micron faces competitive pressures in the HBM market as analysts adopt cautious near-term outlook. But anyway, Morgan Stanley forecasts 25% memory chip price increase, cites AI infrastructure bottleneck, its super cycle till 2028. So we'll come back to the news. I'll talk about the bull case and the bear case. Here's why it's literally hard to be bearish. This doesn't seem like some peak bubble valuation. They traded 18 times net income, and they only trade at 5.6 times next year's net income. That's literally true. Look at this forecast. They're supposed to make in 2 quarters $39 billion in net income. The revenue will be 56, and they'll keep after tax $39 billion on that. The net income has never been close to $39 billion before. There's literally still triple and quadruple digit net income growth literally happening in just the next 2 quarters. So that's why, honestly, you do a forward PE. But here's the thing. you do want to be cautious of the long-term outlook because right now, again, they sell a commodity. They should not be selling RAM at, a 70% net margin. They're not going to be able to keep that up forever. It's like 2028, 2029 is going to potentially be peak ever earnings, but this is a great short-term, medium-term play that'll probably do good for the next 2 years. Morningstar says Micron's overvalued. While the AI-driven memory pricing upcycle and soaring high bandwidth memory demand provides robust near-term tailwinds, the inherent commodity-like nature of the industry and looming risk of a steep cyclical downturn driven by future capacity overexpansion requires some caution. So yeah, that's the one thing to be cautious of. But honestly, I bet the next time they report earnings, they're just gonna, rock it because I mean they're trading at only a 5.6 forward PE. But anyway, it's that long-term thesis you want to keep in the back of your mind. But anyway, great numbers right here. Yeah, Google raises capex guidance to 205 billion, reinforcing AI memory chip demand outlook. Elon Musk publicly thanks Micron for significant memory chip allocation. Okay. Michael Burry, expands short position in Micron and Nvidia, citing AI circular financing risk and expected 30% sector concentration. Anyway, there we go. That's Micron, your memory chip. Honestly, it's probably a decent buy as a small size position. Now's not the time to go all in, but maybe nibble a little bit as a short term, medium term play, I think. Yeah, hey, try not to spam there in the chat. I'm trying to get to the new people stock first. What app are you using? Yeah, hey, I'm actually on a brokerage just like Schwab and Mirror Trade. If you want to get this brokerage I'm on, it's linked in my bio there. My favorite app to buy and sell stocks on. And actually, the analysis tools are what makes this my favorite brokerage ever. I got all the brokerages. I got Webull. I have Robinhood as well. But honestly, Moomoo is my absolute favorite one with the lowest fee. There's literally no fees at all. Lower fees than Webull. So anyway, if you want to check it out, I have it linked in bio. Um, what's next here? Pepsi. Okay, let's do Pepsi stock. Yeah, so Pepsi Cola or Pepsi is trying to get into more healthy oriented stuff, sugary beverages they're trying to get away from. So what is this? Reports PepsiCo snacking business turnaround loses momentum amid macro pressure. So one of the main things hurting Pepsi is, of course, the GLP-1 weight loss trend. Americans, actually, this is a good thing, though. Americans are trying to be more healthy, we assume. So anyway, they're trying to be more they just acquired, like they own a ton of brands that you've heard of: Lay's, Quakers, Doritos, Pepsi, Gatorade. Oh yeah, they just these are the two brands they just bought. They bought Poppy and they also bought this like I don't know what this is, but some organic chip brand. Anyway, they own a ton of popular brands that you've heard of before. Mountain Dew, these are all owned by Pepsi. Did you know Pepsi used to own Taco Bell, then they spun it off into Yum Brands, but they kept a lifetime contract. So every time you go into a Taco Bell or KFC, that's why you always see Pepsi products because they used to be owned by Pepsi and they have a lifetime contract to only serve that. Anyway, one thing that's not great on Pepsi is kind of the revenue growth hasn't been explosive. If we zoom out, the revenue is kind of the same that it was 3 years ago, but the growth looks like it's finally starting to pick up again. It's up 6% year over year. Net income grew by 10% year over year, so that's good. 12% net margins. It's a nice dividend play too. You get 4% of your money back a year. Literally, you get 4% of your money back a year just in a qualified dividend, but you do want to be cautious of the payout ratio. They do pay out 90% or 80 to 90% of their net income just in a dividend. So I honestly wish they had kind of a lower dividend, but I love their brands. Purple Doritos are the best. But yeah, anyway, I like Pepsi, Flamin' Hot Cheetos, Gatorade. Actually, Coca-Cola reported earnings today. We just saw Pepsi's kind of down bad. Coca-Cola's at a crazy all-time high today. Their Powerade brand did really good amid the World Cup sponsorship. Anyway, I actually own the big bottler for them. I own Coca-Cola Consolidated. It's the largest Coca-Cola bottler. Do you own slash thinking to own any Chinese stocks? Well, the only really my favorite Chinese stock if I had to own one would be Tencent. If this was a U.S. listed stock, this would replace Tesla as in the Mag 7. This is like actually, that's more than a video game stock, but they own like so many video games. If you heard of Riot Games, which owns, you heard of League of Legends, Valorant, they own all that. They own 49% of Epic Games, which is Fortnite, so they own half of Fortnite. They own PUBG. They own Supercell, so you heard of Clash of Clans, Clash Royale, all that. They own all that. They own a 10% stake in Snapchat, Spotify, Pinterest, Reddit. Like this is an ETF in one. I just love this company. So anyway, unfortunately, they're Chinese, and Xi Jinping and just swipe of his finger can just destroy any company he wants. So China's looking more and more uninvestable, sadly. So what was the CMXT stock we were just talking about? Yeah, CXMT. This is that Chinese IPO. This is actually the biggest Chinese company by market cap right now. I don't know if it's still, but when I checked it earlier, it was the biggest Chinese company by market cap. But yeah, this is your Chinese memory play that sells, RAM and stuff. And Apple is actually now buying chips from them or memory from them. Okay, that the ticker symbol for that is 688825. Okay. Ooh, someone said Taiwan Semiconductor. This is honestly one of the best ways to play AI. Then we'll get to. Oh, I'm so behind. Then we'll look at Sand or SMH and SAP. Yeah, hey, SAP and PSX. So here's Taiwan Semiconductor. If you didn't know, Nvidia just designs their chips. Apple just designs their chips. Taiwan is or TSM is the one that actually manufactures them. Is there any news here? Taiwan Semi to raise manufacturing prices up to 10% starting in 2027. So, hey, that's good news for their earnings. Nice little earnings tailwind there. Here's why it's hard to be bearish. I mean, they're at a 20 forward PE. They only trade at 20 times next year's net income. Literally biggest market share, 72% market share. Check out these net income forecast. It's supposed to hit 24 billion of net income in 2 quarters. This is insane. I mean, they just print net income every quarter. But look at the margin specifically. For every $100 that comes in, they keep 50 to 60% of that in after taxes. So they have like a 55% net margin. They print free cash flow. Gross margins are up by 15%. Net margins are up by 28%. And they just rose prices by 10%. So honestly, I mean, I can see why this stock has done so well if we zoom out. And honestly, if I was a shareholder, I would not trim or sell my position. This is the kind of stock that's just going to continue to climb higher. At a 20 forward PE, this could easily stretch up to like a 25 or a 28, 29 forward PE and send this back to all-time highs. Morningstar says they're undervalued. Elevated capex from hyperscalers, dominating market share in AI computing chips, and leading-edge process technologies will drive long-term value growth. Plus, you get basically 1% of your money back into dividend every year. Taiwan Semiconductor is great, and they got that price increase. Oh, BE. Yeah, hey, we already covered BE a minute ago. Basically, what I'll say is they report earnings today, literally in less than 2 hours. So if you buy this, it's basically a bet on earnings. So I really wouldn't. Pure speculation. But yeah, in 2 hours, they're either going to go up or down a huge chunk. Revenue is supposed to double. EPS is supposed to grow 300%. So I am actually, I'll be watching it, but I won't. I'll wait till after earnings to see what I'll do. But yeah, the valuation, they traded 80 times next year's net income. It still looks a little expensive. Okay. Oh yeah, the SMH ETF. Yeah, great suggestion here, Young Mar. So if you don't know which semiconductor play, like you've heard about the semiconductor boom, you're like, all right, do I want to buy the memory shortage or do I want to buy AMD that is booming from CPU shortage or do I want to buy NVIDIA that makes the best GPUs or Taiwan Semiconductor that manufactures the GPUs for NVIDIA? Well, you could just buy this ETF that diversifies you into the entire industry. Its largest holding is NVIDIA, then Taiwan Semi, then Broadcom that makes the custom TPUs for Google, then AMD, the CPU, then Micron, the memory shortage, ASML, the lithography company that makes the chip-making machines for Taiwan Semiconductor, Samsung and Intel, Applied Materials for international exposure. I mean, this is a great ETF, and historically, it crushes the S&P 500. And you always want to, buy this one when they're on a massive downtrend, because whenever tech semiconductors get hit, they get hit hard and have a massive downtrend. And honestly, now could be an interesting time to buy maybe a little bit amount of them. So yeah, it's a more diversified approach as to just buying one singular stock. And it's actually this ETF has actually outperformed NVIDIA because NVIDIA's kind of stayed flat for a while, but the memory stocks and AMD have really surged this ETF to rally much faster than anyway. Thoughts on ACN? It's finally seeing some momentum. Okay. This is Akinter or something like that. This is a consulting company, if I remember. Yeah, dang, nice. They're up 7% on a nice little uptrend. Really, all of the beaten down stocks are starting to recover. Okay, no news on this company. I remember there was some really bad news around ACN. Like they lowered guidance by like 40% or something. Like a stock doesn't just go from $400 to $164 in a year for no reason, but maybe all the worst fears are fully priced in. Let's see what Morningstar says. Morningstar actually says they're undervalued. Its dominant position in end-to-end IT services, strong relationships with Fortune 100 companies, and the potential to capture AI-oriented digital transformation demand will drive long-term value growth. And honestly, yeah, they are really cheap. 11 times next year's net income. Hmm. What's the growth of the revenue? So kind of mid single digit growth, maybe higher, 5, 8, 5, 7. So nice growth there. Net income didn't, well, they still actually decent margins. Some of the margins have deteriorated the past 3 quarters, but still, like, if you average it out, like 10% plus net margins across the board, like there's no bankruptcy risk. I don't see. I mean, they're still making over 1.5 to like 2 billion in net income every single quarter. So interesting. Oh, they have a 4% dividend yield. So you buy this, they pay out half of the net income for the dividend. Well, let's see exactly how much the dividend costs. So they made 2.39 billion this quarter. The cost of the dividends and the cash flow statement, and the dividend cost, okay, 995 million. So they pay out 1 billion in dividends a quarter. So yeah, it's like a 40% payout ratio. That's reasonable. They can afford it. Okay, so bearish on SMH. I'm not bearish on SMH. It's um I'm a huge fan of SMH's top holdings. Okay, what's next here? Yeah, my thoughts on SanDisk are kind of the same thoughts I have. I just analyzed Micron and SK Hynix. I have the same thoughts. It's all the same memory sector. There's not much of a difference between like SanDisk and Micron. Hey, what's up, Hector? He says, "Hola, hey, what's up, man? Glad I got Domino's Pizza under $300. Let's check out Domino's Pizza. I love McDonald's stock too. Yeah, the food stocks are having a decent rally today. Then we can look at like Coinbase, and I see like Oracle. So anyway, here's Domino's Pizza right here. They're having a tough time expanding internationally. Let's see if there's any news on their weekly news here. I guess my Wi-Fi is acting up. Oh, dang, my phone's getting low on battery. Okay. Anyway, EPS misses estimates. So same store US sales, US same store sales only grew 0.1%. Same store sales includes stores that have been open for more than 1 year that only grew 0.1%. But international same store sales declined 0.1%. And the company added 209 stores globally. Yikes. So that might be why the stock has been struggling before today. US sales only grew 0.1 and international declined 0.1. But Warren Buffett's company just bought this stock, Berkshire Hathaway. Morningstar says they're undervalued. A scale-driven cost advantage, robust digital loyalty ecosystem, and a successful fortressing strategy will drive long-term value growth despite near-term headwinds. So yeah, here's their actual number of stores. Oh, that's pretty cool KPI metrics. 22.3K stores. And yeah, here's the net income right here. It's not growing too fast. That's probably why the stock isn't growing too fast either. Like net income's up 3% this quarter, but last quarter it fell 6%, then it grew 7, then it fell 5, then it fell 7. So anyway, it's still a quality company. This is really like a franchise royalty model, business model, where all of the franchise Domino's Pizza have to pay like 4% of every sale back to the parent company. So, hey, actually, we have not covered Microsoft, and we have not covered Intel either. Let's cover Microsoft first because I love this stock for real. This is the best software company by market share, the second best cloud company by market share, and a phenomenal AI play. So, if you want exposure to 3 sectors that I love, software, cloud, and AI, and a bunch of other sectors like gaming, like they own Xbox, they own Minecraft, they own Activision Blizzard, they own LinkedIn. Check out Microsoft. You literally, am not financial advice, can't go wrong buying Microsoft. They report earnings tomorrow, and I think depending on their CapEx numbers, they're going to do great. So anyway, even Morningstar says they're undervalued. Continued expansion of hybrid cloud, secular tailwinds from AI, driven Azure's growth. Okay, anyway, Microsoft, the behemoth, only trades at 21 forward PE or 21 times next year's net income. That is ridiculously inexpensive for how quality Microsoft is. And hey, Isaiah, dude, thanks for all the gifts there. Yeah, hey, I'll try and get to XYL after this. And Peter, hey, did you have a stock too? Or Pete, I think you said Oracle. Remind me if you had a stock. I'll check it out. Thanks again for all the little donations there. But anyway, 42% of Microsoft's revenue is this software business. Think of office products like Excel, spreadsheet, PowerPoint, Word. That does over 120 billion of annual revenue for Microsoft. That's why they're the world's biggest software company. Their next biggest business is their Azure cloud. Their intelligent cloud business also does over 106 billion of annual revenue for Microsoft. Then they have their more PC business. Obviously they own Windows, Minecraft, Xbox, Activision Blizzard, LinkedIn, so many other great things. So honestly, this is why I'm so bullish. Like, they're not missing on earnings. It's just they're raising capex higher than investors want. They're going to make 31 billion in net income next quarter, 34 billion the quarter after. I mean, there's no slowdown to the earnings. So that's why I believe fundamentals always outshine in the long run, and they won't be this cheap forever. So that's why I actually have literally been buying a bunch of Microsoft at a 21 forward PE. I mean, it seems cheap. What is this? OpenAI agent escapes sandbox, conducts a multi-day cyber attack. Uh-oh. Actually, for the AI play, obviously Microsoft owns Copilot, but they literally own 28% of OpenAI. So if OpenAI really takes over their software business, they're hedged as a big owner of OpenAI. And also Anthropic is a huge customer of their Azure cloud business. So anyway, if AI takes over, they benefit from their cloud business and investment, which they're already up like 50% on OpenAI. So, or 50x on OpenAI. Okay, XYL stock. Let's see what this one is. Xylem. Okay. Oh, hey, Plasma, what's up? We'll try and get to TTMI as well. And we'll get to Oracle. Yeah, I love McDonald's too, or the McDonald's stock. McDonald's is really a real estate and royalty company. A lot of people think they're a restaurant, but they're really way more interesting than that. So, and New Jersey Mike's is about an IPO too. They're a big royalty play. So here's Xylem stock. I've actually not heard of this one, or I've analyzed it, but I've forgotten what they are and what they do. So they are trading at 24 times net income. They do water infrastructure, water solutions, and measurement and control solutions. Huh. So it must be like a water utility serving company, specialty industrial machinery. Huh, maybe water pollution solutions. Does Morningstar cover this one? Let me check that out, actually. Morningstar research, please load. Yeah, they do. So growing demand for fresh water in developing countries and the need to replace aging infrastructure in developed countries will create long-term growth for Xylem. After recent acquisitions of smart meter and leak detection companies, Xylem can offer utility as a comprehensive portfolio of products. Organic revenue growth has been but here's what the bulls are saying, here's what the bears are saying. Organic revenue growth has been relatively sluggish in past years due to soft industrial production and commodity prices. Persistent strength in the US dollar could make Xylem more susceptible. Well, that's no big news. Anyway, let's check out the revenue growth. So yeah, that's one of the bad news. Like, revenue's up 2.7%, after grew 1.77. So it kind of grows like low single digits. We kind of want to see that grow a little faster. So that might be why the stock has been beat down. But this is incredible net income. And actually, they've had pricing power. Net income's growing faster than the revenue. So they're easily making, if you average it out, well over like 220 million of net income every single quarter. And you get a 1.3% dividend. Interesting. Some sort of water, smart meter, leak detection, kind of water portfolio company there. I don't know. Oh, I have not heard of PPSI. Is that a stock? Or that must be a ticker symbol. Maybe we'll check that one out. But I actually wanted to get to Visa real quick. What's up, Gekata? Probably saying your name wrong there. I apologize. But he said Visa stock. I freaking love Visa. And they report earnings in 2 hours. So get ready if you own this stock, because they're reporting earnings in 2 hours. Every time you swipe your Visa card, there's a small little micro transaction fee that are slowly bankrupting us. But they make crazy money. Look at this. Visa has a net margin of a 53%. So for every $100 that comes in, Visa keeps $53 after tax. Like, here's the revenue. Revenue was 11.23. They kept $6 billion in net income on that. And that's after tax. Before tax, before interest was 7.5. Then after tax, they really did keep $6 billion in net income, which puts them at a 53% net margin. And the growth is not done there. If we zoom out on net income, this was their best, like, historically, look at how they grow their net income. But this quarter was a record $6.02 billion of net income. Check out the forecast. They're going to hit 6.4 billion in net income. Like, the growth is not done. There's still a lot of EPS and net income growth on Visa. That's why you want to do a forward PE on how you analyze them. And Visa only trades at 26 times next year's net income. That doesn't seem like some peak bubble valuation to me. That's why if I was a Visa shareholder and I was up a bunch on my shares, I would not trim or sell. This is the kind of stock that's just going to continue to hit newer and newer all-time highs, I believe. This forward PE can easily stretch up to like a 30. Send this to crazy all-time highs. Morningstar says they're reasonably valued. Its unparalleled position in global electronic payment infrastructure and the ongoing secular shift toward digital payments will continue to drive long-term value growth. Projected strong double-digit growth driven by resilient customer spending, cross-border travel recovery, FIFA World Cup, and expanding high-margin value services. Okay. Anyway, they report earnings in 2 hours, so get ready if you're a shareholder of that one. So, Oracle. Okay, let's do Oracle right here. I am scared of this company's debt. They have way too much debt to trust, and they just got, this is the worst credit rating you can have, a triple B minus. That's actually junk bond status. So you can literally buy Oracle's debt for 7%. Like, that's crazy. You can buy their debt and they pay you 7% of your money back a year. That's because there's a lot of risk to it. Analysts mourn a $500 billion financing risk in Oracle's AI cloud expansion. So Oracle's New Mexico project, Jupiter, faces second natural gas pipeline rejection. Wisconsin regulators require Oracle to post over. Okay, anyway, that's the one tough part, but it's also hard to be bearish. Like, you look at Oracle, you see an 18 forward PE. They only trade at 18 times next year's net income. So their net income is fine, but it's really a cash flow and debt problem. Like, look at these negative free cash flow numbers. Negative 2 billion, negative 11 billion, negative 10 billion. That's because they're spending a lot more than they're making on CapEx. Check out this CapEx down here. They, invested 15 bill last quarter, 19 bill the quarter after. They only make, after tax, 4 to, well, this was a one-time adjustment. They make like 4.5 billion in net income a quarter. So they're definitely spending more than they're making. So that's why the leverage is a little unfortunate. If we go to this is the current debt. This is only 7 billion, but then you got to look at the nasty stuff, the long-term debt. 122 billion of total long-term debt. And they got to pay a lot of interest on that. Actually, they pay over 1% of their market cap just in interest expenses a year. Here's the interest expense, 1.15 billion. And the other tough part is, they made 4.3 billion. They didn't actually subtract 1.5 billion from that because they pay a dividend every quarter that cost exactly 1.5 billion a quarter. So I don't like that they pay out legit 35% of their earnings in a dividend. So honestly, it's probably the worst fears are priced in though. But they have a lot of debt. Like, how are they going to pay off $130 billion of debt when, they don't really make 4.3 billion? You subtract 1.5 billion. They make 3 bill a quarter. How are they going to pay off 130 billion? They do have a crazy backlog, though. They have a big backlog of orders specifically from OpenAI. Actually, here's Morningstar says they're undervalued. While higher than expected CapEx forecasts have compressed near-term free cash flows, strong demand for generative AI and the rapid ramp-up of its cloud infrastructure will drive long-term value growth. So this is the fourth biggest cloud play. Number one cloud play is AWS by market share. Then it's Azure Cloud by Microsoft. Then it's Google Cloud. Then it's Oracle Cloud. I actually would prefer, if I was going to buy a cloud company, I would actually prefer to go with Microsoft as a bigger market share, better financials, and you get some other great businesses as well, like their OpenAI investment. You get LinkedIn and Xbox, Minecraft, Windows, their software suite. So that's my suggestion. I would be a little cautious on Oracle. They have a 1.7% dividend yield. I don't know. Okay, Hayden said APH. Yo, this is one of my buy and never sell stocks, actually. Yeah, down here. And they're down because Corning's down on the day, but they report earnings tomorrow. And then we'll look at TTMIs next. Hey, Plasma, are you still in here? We'll look at TTMI after this. Sorry, I'm so behind on the chat. I apologize here. And thanks again, Peter, for the gifts there. I appreciate that. I didn't mean to be too bearish on Oracle, but the debt does scare me a little bit, and Moody's kind of agrees. So here's Amphenol right here. This is the company that provides copper cables and fiber optics to NVIDIA and Google's TPUs. And check this out. Morningstar says they're undervalued. Massive demand from AI infrastructure investments for its best-of-breed data center connectors. They really do have the best data center connectors. And they only trade, this is the crazy part, this says they trade at 41 times net income. That's actually not true. They had a one-time adjustment. It's actually lower. And here's you just do a forward PE to see what they really trade at. They only trade at 26 times next year's net income. That's what the S&P 500 trades at. So yeah, their communication solutions, that's up 87% year over year after it grew 90. I mean, look at these growth rates. At this growth rate, what's it going to be the same time next year? Have you ever heard like the internet is really powered off subsea cables? This is the company that makes those. Harsh Environment Solutions is up 33%. These are their underwater military defense connectors. And they own like 2,000 plus patents. Their interconnect and sensor systems is up 25% year over year, fastest growth rate in years. You get a 0.6% dividend. They raise their dividend way faster than inflation every year. So anyway, I'm totally biased, but look at this. My cost basis is down here all the way at $71. I am literally buying stock, more of this stock, even though I'm up over 100% on them. I continue to buy more Amphenol because they're still undervalued, even though they've had such a massive climb. I mean, a 26 forward PE, that's cheap. So yeah, there you go. Pretty cool. I call them AI infrastructure, like the picks and shovels play. Instead of just owning NVIDIA, own the companies doing the copper cable and fiber optics, companies doing the HVAC and MEP work and construction and powering. I mean, there's so many ways to play it on top of just Okay, TTMI stock. So thanks again for becoming a member, Plasma. Hope you're having a good day. So TTM Technologies, and dang, I gotta get my charger. So they are down 13% on the day. It's an $11 billion company. Let's see what happens. So commercial and aerospace and defense, that's a nice sector to be in. Also commercial, that's up 48% year over year. What do they do specifically? Electronic components, they do printed circuit boards and backplane assemblies. Whoa, oh, well, I guess their website's not working. So they do RF and microwave components. Okay, okay. Well, let's see. These forecasts are really good. Holy smokes. So if we go to the revenue right now, the revenue's up 30% year over year to 850 million. It's going to hit 1 billion in 2 quarters, and not just revenue, but they're going to make 96 million of net income on that. If we zoom out on the net income, it's never been close to 96 million before. So there's still hundreds of percentage of EPS and net income growth still on TTMI to come. That's why if you look at the valuation, it says they trade at 60 or 58 times net income. Look at how it gets cut in half. They only trade at a 29 forward PE, 50% lower, because the net income is doubling in just 1 year. So that's why you really got to do a PEG ratio, a price to earnings growth, which factors in the annual EPS CAGR. So anyway, interesting, probably AI beneficiary company there. Okay, so yeah, someone said SanDisk. Okay, again, my thoughts on SanDisk are the same as Micron and SK Hynix. So this is the same thesis. So basically, let's look at SanDisk right here. So it's hard to be bearish on SanDisk because of this valuation, or it's super hard to be bearish short term. Did you know SanDisk only trades at 5.7 times next year's net income? And that's true. Look at these net income forecasts. They're supposed to do 5 billion of net income next quarter, 6 billion in net income the quarter after. That's insane for this company. They're about to hit record net income and stuff. But the thing, like 60% net margin. But the thing is, again, they just sell a commodity, very cyclical. These DRAM chips for data centers. They should not be selling this at a 60% net margin forever. They're going to still do it for the next 2 years, but it's the 2028, 2029 forecast you got to be worried about. And that's why this is a great short-term, medium-term play, but not a forever hold, in my opinion. Actually, that's what kind of Morningstar's saying. Morningstar says they're a bit overvalued. Extreme market-driven cyclicality in the commodity NAND flash memory sector and a fundamental lack of pricing power present major long-term margin compression risks that require investor caution. Again, it's not... it looks like most of the revenue is China, then US, then Hong Kong. So this one looks like a more international memory play. But anyway, it's just another way to play the memory shortage. And they're very similar to Micron. Actually, they're the same valuation as Micron in terms of a forward PE. But it's that long-term thesis. And honestly, I bet it's probably a good deal. It honestly seems like a decent deal right now. Like, this doesn't seem like some peak bubble valuation, like a 5.6 forward PE. I feel like this could easily stretch up, or 5.8 forward PE. This could easily go to like an 8, 9, or 10 and send us up 30, 40% from here. All right, so same with Micron. They're cheap too. What's your investment thesis on COKE? So yeah, this is Coca-Cola Consolidated. This is actually a Christian value-based company. I've met the CEO, I've shaken his hand, I've seen his presentations. He's a great guy. He owns 70% of the voting rights. So you basically have no voting rights, which is how he keeps the company Christian Value. He has like a chaplain and all of the bottling facilities. This is the Coca-Cola bottler, largest bottler for Coca-Cola. They bottle all your favorite brands like Sprite, Smart Water, Minute Maid, Body Armor, Fairlife, High Protein. That's actually doing really good right now. Vitamin Water, Gold Peak. They even bottle for Monster because Coca-Cola is the biggest shareholder of Monster. Powerade, which is doing really good because the World Cup. Barks, Fanta, Topo Chico, I love. So anyway, Coca-Cola, the mothership, sells the syrups to this company. If you didn't know, here's how the Coca-Cola bottlers work. They are the only company in their state's rights. They are the only ones allowed to sell Coca-Cola products in that state. No other company can. Not even the main Coca-Cola company can sell their bottled products there. So every time, basically, a drink gets sold in these states, they collect a royalty. The real growth driver has been their pricing power. This has so much pricing power. The margin expansion here has really been the main beneficiary. So anyway, great company. There is no analyst that cover this one, but yeah, they are a little expensive, so I would be cautious at. Well, actually, not really. I thought they're at a 26 times net income. I actually just bought some more of this company after they fell on earnings. They had a $30 million cost increase because of aluminum inflation. You know, they bottle aluminum bottles. Anyway, cool company. A phenomenal buy, never sell. Would you buy now Waste Management or Republic Services? Dude, I've owned both of those companies before. That's a great question. I regret selling both of those. Honestly, I picked Republic Service, but I honestly don't know. Waste Management just acquired this medical disposal business. Anyway, if you're looking for an AI proof, like just stock that just always does good, check out Waste Management. You know, Americans are so wasteful. There's a lot of trash we got to throw away. And Waste Management owns super valuable landfill real estate as well. You get a 1.5% dividend. Even Bill and Melinda Gates, or Bill Gates, the Bill and Melinda Gates Foundation owns 7% of all the shares here. They're just a money printer. Look at this net income over time. They just easily make like 700 million of after-tax net income a quarter. Then they buy back some shares and pay out dividends. So pretty cool. What's the valuation though? Yeah, so a 29 forward PE is that, I don't know if I wouldn't buy meaningfully today. I definitely would not buy meaningfully today, but it's just such a quality stock. You can just sleep well at night knowing. Okay, Morningstar says they're slightly overvalued. While its unmatched landfill network and strong pricing power provides robust cash flows, cautiousness is warranted due to risk of valuation multiple and volume headwinds during an economic down cycle. That's really not too bearish. Anyway, great. If you have time today, can you look at BKNG? Booking, yeah, BKNG. 156 billion in debt. I don't think that's true for Booking. Or maybe you're talking about a different stock. Oh, you're talking about Oracle, yeah. Okay, so here's Booking.com. This is another basically royalty collector. Every time you go book something, or what other websites? Is it like Trip.com and TripAdvisor? What are their actual websites? I forget. So yeah, Booking.com, Priceline, Kayak, OpenTable. So yeah, so it provides reservations including hotels, apartments, vacation rentals, and other properties. Basically, check this out right here. Oh, Morningstar says they're reasonably valued. An expanding global network of accommodations, successful vertical integration into flights and payments, and secular AI-driven platform enhancements will drive resilient long-term value growth. An 18 forward PE, that is cheap. They only traded 18 times next year's net income. But yeah, anyway, yeah, really good margins. I mean, the gross margins, a 98% gross margin, net margin of like 20 to 30%. So yeah, they collect easily over $1 billion in net income a quarter. Yeah, very consistent. Looks like maybe Christmas time is their best quarter every year. Anyway, it's tough to be bearish at an 18 forward PE. Is there any news? Nope, no news around Booking. Is there a room nights increased 6%, gross bookings rose 15. The US market showed accelerated room night growth. The connected trip strategy drove high teen percentage transaction growth. Anyway, interesting, very interesting stock here. One that does massive buybacks too. Actually, maybe I should show that. This is not a great way to tell. Anyway, if we just go down here and we go to the Oh yeah, and they pay a dividend now. But look at the buybacks they did. Like literally every quarter, they buy back like 1.5 to 2 billion of their stock every quarter, which is, and they bought back 3.7 billion of their stock this quarter, which is, I believe, over 10% of the company. Net income grew by 225. Net income per share grew by 240. How did the net income per share grow even faster? Well, it's that per share part of the ratio. Whenever a stock buys back their own shares, literally gives you more ownership in the company, forces the EPS go up because the denominator is less. There's less shares that exist. It makes the dividend cost less. It basically forces the stock to go up. So I love share buyback companies. I specifically look for companies that buy back their own stock, like all of these companies right here, like Google, United Rentals, McDonald's. They all do all these CEG, Carlisle. They all buy back a good chunk of the company a year. Um, Next up, Ricardo said MVST. Is that Microvast? Okay, this one I would not touch, sadly. They're at an all-time low right now for a reason. If you look at the top right, I mean, it's just hard to trust a company like this. The whole company is only worth $250 million. That is a micro cap, and I usually don't even like consider those as like I don't even consider those. But yeah, if we look at the revenue, the sales, the lifeblood of the company, it declined 47% year over year. Let's see what the forecasts are. So yeah, dang, that was a big miss. Analysts expected 99 mil, they only did 60. Last quarter as well, they expected 131, they only did 96 mil. Whenever you miss that much on earnings, I can see why this stock has done so bad. What's the short interest? Only 6% of the shares are being shorted. Not too bad. Is there any news? Files form with SEC for potential delisting and deregistration because they don't meet the requirements to stay listed on the stock market. Whenever you're a penny stock like this, they got to do reverse splits. I I would be super super careful around this company. So revenue dropped 49%, impacted by regulatory changes and delayed OEM platform ramp ups. Profitability was weak with just negative EBITDA and EBIT. So I don't know about that one, sadly. Doesn't have the nothing's really impressing me there. You know what I mean? Maybe a fun little short-term swing trade, but not one I'd trust a lot of money in. So Remco says PCAR. And hey, what's the ticker symbol for Aerotine International? Oh, and that man said CF stock. Yo, that's that fertilizer play. I've been loading the boat on CF stock as a commodity play. Maybe we'll check that one out next. So, and hey, holy, thanks for that gift there. Good to see you, dude. Hope everyone's having a good day. I know AI stocks are kind of tanking today, but that means we get to buy the dip on great companies. So PCAR is actually at a crazy all-time high right now. Despite all this AI fears, this company doesn't even care. This must not be in tech. So yeah, they only trade at a 22 forward PE, only at 22 times next year's net income. They do trucks. Their truck revenue is 68% of the revenue, then parts, financial services. So farm and heavy machinery is their industry. So let's see what kind of trucks they make. Okay, can we like load this image here? Well, I guess products and services. I guess they make like these big shipping trucks. Yeah. I guess, yeah, like literal trucks. Anyway, this is a shipping beneficiary. And I think I know why this stock is up, just like JB Hunt and CHRW. The trucking industry has had expanding margins because of new changes the administration just made. So honestly, it's kind of a good move. You can no longer be, or I'll start the story out. In 2021, we had a ton of supply chain issues. They allowed people who didn't speak English to pass like the trucking exam. You could become a truck driver even if you didn't speak English, and that's one of the requirements. You got to speak English. Now they're cracking down on it. They says you got to speak English, and basically they've had massive pricing power. Anyway, CHRW too is a big beneficiary of that, and there's also AI trucking. You know, I'm a believer that these will also benefit whenever we get like autonomous driving trucks. Okay, so CF stock, you know what? I'll show you my stock over here. So this is a commodity company. So because it's a commodity stock, this is not one you'd want to trust a meaningful amount of money in. But here's the thing, this is a fertilizer commodity stock selling ammonia. Out of all the commodity stocks, I want to own the one that like even on their worst ever quarter ever, they still made a profit of $230 million. Like they're a money printer. And the best part is the share buybacks this company does. Actually, I'll pull that up really quickly. So if we go to actually, this is the better metric. Instead of total common shares outstanding, I like to look at the diluted weighted average shares because it includes stock options and stuff like that. They have bought back 8.5% of the company after they bought back 10% of the company, after they bought back 6% of the company, after they bought back 8.5, after they bought back 0.3, after they bought back 5. So look, in 2020, there were 216 million shares that exist. Now there's only 154 million. And here's what that does for you as a shareholder. So net income grew, look at the green number, kind of the growth rate under it. The net income grew by 92, but the net income per share grew by 115%. That's because, again, the per share part of the ratio, they do massive share buybacks and you get a nice dividend. So basically, out of all the commodity stocks, this one has impressed me even more than all the oil and gas stocks that I see out there. So because it's a commodity stock still, you don't want to honestly own a meaningful amount of money. So only have like $600 in the stock. But yeah, an 8 forward PE, only trading at 8 times next year's net income. And and this is kind of their moat here. High shipping and storage cost for importers of nitrogen fertilizer limit the competition for CF faces in North America markets and outside regions with low natural gas cost. So we're not importing our own ammonia. That's their huge beneficiary there. It's just too expensive to have competition. So they have like our own little moat because of that. So anyway, little fertilizer play, and look at these net income forecasts. They just crushed earnings, and this was real. Analysts expected 420, and they did 615. And that wasn't like some accounting fluke. Even on EBIT, they expected 607. They did 838. A massive quadruple beat on earnings, and I bet they're going to continue to beat. Anyway, that's a CF fertilizer commodity stock. I know it's probably a little boring, but I like introducing people to new stocks. Thoughts on SpaceX? Yeah, actually, I am avoiding this one. The valuation's just too ridiculous. Like, even though they're on like this big downtrend, they still trade at 330 times next year's net income. It's just too tough to trust. I mean, Elon's companies trade really expensive. Like, I wouldn't buy Tesla either. Morningstar even says, like, from CPAs, they say they're overvalued. While its dominance in reusable rocketry and satellite connectivity provides a narrow economic moat, the aggressively lofty valuation and the prices in the best case scenarios for highly uncertain moonshot projects like unprovable orbital AI data centers requiring extreme caution. It's just the valuation is too ridiculous to buy even now. And also, yeah, there's this lockup expiration. So stocks always rally when they first IPO because there's literally barely any shares that exist. The people who bought on the IPO can't sell their shares for 30 days. So there's no selling on the order book. And this was a super oversubscribed IPO. So the stock rallied up. But in 1 year from now, there's literally going to be 40x more shares available. And Google's going to start selling their shares too, they said. So yeah, anyway. That's not even, this has nothing to do with financials. The insane valuation is what scares me on SpaceX. And they're almost around the same satellites as SpaceX. Also, they've like taken over Delta Airlines and American Airlines. They've taken those as customers from SpaceX, and Amazon just files another FCC application to deploy 5,000 satellites for direct to device mobile service. So I honestly believe part of your Amazon Prime plan, if you need it, you'll get backup satellite Wi-Fi. And they also provide Wi-Fi to, I believe, the Delta Airlines. Oh yeah, so look at this. Amazon, anyway, what was it? How many? They're deploying 5,000 satellites. Anyway, Amazon's great. And they're cheaper. Actually, Amazon, so SpaceX or Tesla's supposed to be a huge robotics play, space play. If you love that thesis, you'll love Amazon even more. So, in my opinion, better robotics play. They own Zoox, the autonomous driving vehicle company. Anyway, Amazon's a great buy and never sell stock, and that's why I own them is a big chunk as in my buy and never sell portfolio. They're just so quality to me. So Adobe stock. So I'll cover the bear case on Adobe. Adobe isn't missing on their financial metrics. It's simply the thesis is hurting because of AI. Think about this. In 10 years from now, will we need Adobe? Like we can just we just created like a logo. Like people are creating logos and images with Claude Code and ChatGPT and Google Gemini. And I now like a lot of the YouTube thumbnails are created in the YouTube studio. They like recommend an AI generated one for you that looks real based off your old thumbnails. Basically, in 10 years from now, will we need Photoshop as much? But I'm always a believer humans are always going to need the final touch on art. So maybe this won't be a huge um, AI loser, but I really can understand how people will. Canva's a big competitor. I can understand. Google just created something called Google Sketch, which is literally a Photoshop replica. So that's free. So there's some AI disruption fears, of course. So, Anyway, that being said, the worst could be fully priced in. I mean, the stock is already down like 80% in just like a year and a half. So maybe the worst is fully priced in. Like so HSBC upgrades Adobe to buy as a post record revenue. Like that's the thing. If we go out, zoom out on the revenue right here, that's the thing. Like Adobe isn't missing on their metrics. The revenue just hits a new record every single quarter. It's just that AI thesis. And if you believe the AI thesis is wrong, that AI is going to take them over, then this is a screaming buy. They're at like 11 times net income. All right. Hey, what's up, Michael? Good to see you, man. CF, I think will rip off continued Strait of Hormuz disruptions. I agree. Did you know that could be a tech recession or slow the food insurance? Hey, what's up, Michael? Yeah. What about ACI and Flow? Is that Albertsons or what is this right here? ACI. And then what's up, Super? He says TKO. Oh, that's the person who owns the UFC and WWE. Yeah, we'll look at them next. Albertsons, this is a grocery store. Kroger was offered to buy them at over $25 a share, and they rejected it. And now Albertsons is at $11 a share. So yeah, they're a grocery store just like Kroger. What did they do? I mean, okay, so they had a big miss on net income and EBITDA. So the net income was expected to be 225 mil. They only did 84 million. And even on EBIT, earnings before interest taxes, they expected 502. They only did 422. So that's why the stock, and yeah, look at that net income over time. I mean, it kind of like slowly trends down. So I can kind of understand why the stock has been beaten down so much. And it's actually at an all-time low today. So the valuation is pretty cheap though on a forward basis, but that assumes they meet these expectations. Technically, the past 3 quarters in a row, they have been missing on all 3 earnings. So as long as they meet these numbers, you're only trading at 8.7 times next year's net income. And that's kind of what the grocery stores trade at. And honestly, I am a little worried about Kroger and Albertsons because of their lack of online presence. Yeah, like Kroger's at a 12 forward PE. Because basically, anything you can get at Albertsons, anything you can get on Kroger, Amazon Whole Foods will deliver it to you. Walmart has a great shipping logistics business as well. And I think, some of these other grocery stores lack that online presence. That's where they're being out innovated. I have an Albertsons right next door to me. Hey, what's up? Yo, are they doing good? I mean, 8 points. The stock's not doing good. RIP. So let's look at TKO. I'm actually surprisingly bullish on this company. Like a lot of people see this stock and they're like, all right, it's kind of rallied too much. I don't think I can buy this stock. But if I was a shareholder, I would not trim or sell my position. I think they're going to go back to all-time highs. The valuation is surprisingly low. Okay, PE, please. If my Wi-Fi is surprisingly bad too. So the forward PE is a 20. They legit only trade at 20 times next year's net income. That is where they start to get undervalued. So yeah, they own WWE, Worldwide Wrestling. They own the UFC as well. And then they basically license out the rights to these shows to streaming companies, and they basically just collect royalties. Pretty interesting company here. I think they had a slight one-time adjustment last quarter, but yeah, they're going to make 193 mil next quarter, 170 mil the quarter after. But I do notice they have slightly missed on net income the past 3 quarters in a row. So that might be something we'll have a spotlight on their earnings. We want to make sure they don't miss again. Pretty cool company, actually. Like niche, not many companies like that. Maybe I honestly would probably rather buy them than like a Paramount Skydance or something. Why is Apple so bullish? Apple is being rewarded for not spending crazy on CapEx. Google said they're spending $200 billion in just 1 year. Meta's at over 100 bill. Amazon's at like 150 bill. Microsoft's spending 150 bill. Apple's spending like 5 billion. They're being rewarded. And basically, this makes me bullish. Google too. Apple is just going to license out Google Gemini and integrate it into Siri. So Apple plans smart glasses, okay, with privacy-first strategy to differentiate from Meta. I believe, Meta is a genius for being the first to these smart glasses. I believe everyone's going to get into their own smart glasses. But here's another thing. Apple projected to capture 25% of foldable smartphone market. So yeah, they're actually making their own foldable smartphone. Apple partners with Klarna to launch Apple Upgrade device leasing program. Oh no, you can lease an iPhone for 36 months. Apple plans largest Mac overhaul in 5 years with a OLED touchscreen. Oh, a touchscreen Apple device. That'd be interesting. Anyway, the valuation, they're at an all time high right now. Apple actually has the world's biggest share buyback program of any company on earth. Did you know Apple spends 100 billion of their after-tax net income literally buying back their shares every year? They buy back 100 billion of their shares a year. That's why the stock never goes down. They bought back 5% of the shares at 90, 5% of the shares at 150, another 5% at 200. Like you own legit so much more of the company. So anyway, the tough part is the 37 forward PE. They trade at 37 times next year's net income. That's one of the most expensive Apple has ever traded at. Someone says, hey, how can I watch your past live streams? Hey, great question. The only way to support me, I literally sell nothing. I have no course book. The only way to support me and be more than a donation is to check out my YouTube channel. Just type into YouTube Nathan Robert and all the previous streams stay up there forever. Yeah, if you just hit the subscribe button on my YouTube, if you just type into YouTube Nathan Robert, like I don't have it linked on TikTok or anything, just type into YouTube Nathan Robert, you'll find it. But anyway, back to this. Sorry about that. That's the best way to support me if you wanted to help a brother out. But Morningstar says Apple's a bit moderately overvalued. While the firm boasts a highly sticky iOS ecosystem and strong pricing power, the anticipated normalization to mid-single-digit iPhone growth following a robust upgrade cycle does require caution. So yeah, half of the revenue is the iPhone sales, but did you know Apple's most valuable business is the services side? So whenever you buy something on the App Store, an app that costs $10, or you spend $10 on Clash of Clans gems, they keep 30% of every transaction in the App Store. They collect royalties, and this is their services business that does over 110 billion of annual revenue for them. So that's the crazy part. And there's a huge difference in the margins of the two businesses. You know, basically 90% gross margins for their services business, where it basically costs nothing to run. Every time there's a transaction in the App Store, they keep 30% of it as a royalty. Anywho, they're a money printer. They made 30 bill this quarter, 42 bill last quarter, and that's real. Like before tax, before interest, they did 50 bill. After tax, they kept 42 bill. And what are they doing with 30, 40 billion in net income a quarter? Well, like I said, they have the world's largest share buyback program. Look at this over time. I mean, they're always buying back like 20 to 25 billion of their own stock every single quarter. So, and they pay a dividend. They have so much room to raise their dividend too. Their dividend only cost 3.8 billion. And notice last quarter, the dividend cost 3.92 billion. How did the cost of the dividend go down? Did they cut their dividend? No, it's actually share buybacks. Whenever you buy back your own shares, you don't have to pay dividends to those shares, and gives you more ownership in the company. It makes the EPS grow faster. Here's how you can tell too. Net income grew by 19. Net income per share grew by 21.8, grew even faster because the per share part of the ratio. Anyway, Apple's a phenomenal never sell. If I owned it, I wouldn't sell it, but I don't think I'd buy it yet. All right. Any other news? Oh yeah, their administration is investigating the European Union over fines. So actually, I love this news. So EU, like they keep fining all our big tech companies, and okay, so yeah. EU fines levied against major US companies, including Apple, Meta, Amazon, Google, cited over 15 billion in EU fines, warning the EU will face consequences for what you call illegal and highly unethical conduct. So yeah, anyway, that's good news for the big tech companies. AMD, bro. Hey, AMD, I do own that one actually. AMD. And what's up, Jacob? Thanks again for that suggestion there. AMD is actually my best performer in here, but look, we're down pretty bad on the day. We're down, oops. Where did they go? Yeah, we're down 7.18% of the day because of them. Luckily, I kind of foresaw this coming, and I have been kind of trimming my AMD position up here. Like I sold at 577. So because the valuation is pretty ridiculous, but recently we've all heard of let me get my water here. We've all heard of the memory shortage. There's also recently been a CPU shortage and a new CPU to GPU ratio. So about 2 years ago, for every 8 data center GPUs, you would need 1 CPU. Now, this is crazy, for every 2 GPUs, you need 1 CPU. So yeah, KeyBank projects AMD server CPU to grow 20% 2026 and over 50% 2027. Analysts raise AMD price target ahead of advancing AI conference. Oh, and AMD signs major AI deals with Anthropic, which is apparently the best coding LLM, Claude Code. The best LLM is buying AMD chips, plans $5 billion investment. Also, where's the Microsoft news? Microsoft just bought a bunch of AMD's chips as well. I'm not seeing that news on here, but anyway, AMD raises total addressable market to 1.4 trillion. I mean, anyway, this is a great AI play, but they're too expensive to buy now. At a 68 forward PE, I mean, well, look at this though. They traded 150 times current net income and only 68 times next year's net income. Look at how it gets cut in half because the net income is doubling. Here's the forecast. Net income's going to hit 2.18 billion. It's never been close to that before. Like they already grew 95, 200, 61, 200%, and it's about to hit record 2 billion in 2 quarters. Never been close. Revenue's going to hit 12 bills. So they're still just mad. Like, here's the thing. Like EPS is going to go 40% this year, 40% next year, 40% the year after, 40% the year after. So you really got to do a peg ratio. But now's not the time to buy that one. What happens is, hey, I'm actually on a brokerage. It's just like, Charles Schwab or E-Trade. If you want to get this brokerage I'm on, it's actually linked in bio. It's an affiliate link too, so it helped me out. But you can just type into Google Moomoo if you want to get this brokerage. Or I think that's the one you're talking about. I got all these brokerages right here. They're all brokerages. And they're all publicly traded too. I do own Moomoo stock. I own Robinhood stock. They're all great. But yeah, my favorite brokerage of all time is this one. Cheaper fees than Webull. Literally costs nothing to use this. No hidden fees, no nothing. So anyway, linked in bio there. I'm looking at a few more stocks here. Then I got to go before my phone dies. Dang, 6%. I don't even have a charger anywhere close to me. Yeah, part of EU's like entire budget is literally like finding US companies. It's really sad. Um, oh geez. I'm shorting the SPY. Let's go. Hey, I'd be careful. Historically the S&P 500 does 8 to 10% a year. Actually, I would be really cautious. I'd like if I'm going to short something or buy a put, I'm going to do it on an individual stock. Here's the thing about the S&P 500. I am actually extremely bullish on it because we're not in a bubble, in my opinion. The largest holding is NVIDIA. They're cheap at a 19 forward PE. Microsoft, which is 5%, is at a 21 forward PE, extremely cheap. Amazon's at a 26 forward PE. Did you know Google's at a 24 forward PE, also cheap? Like Meta's at a 18.9. These are historically the cheapest. Like this is why we're nowhere near like the dot-com bubble. Valuations are legit dog cheap on all these great companies, just CapEx fears that are sending them down. And also, we've seen some sectors like food sector and software being hit hard. We're starting to see a rally in those sectors again. Can we please do SanDisk? Hey, we literally just covered SanDisk not that long ago. Hey, what is silver? You just want me to cover actual silver? Here's the actual commodity of silver, ticker symbol SLV. It's an ETF. Dang, they're down pretty bad. Like a year ago, they were 106, and now it's $51. Dang, silver has had a nasty downtrend. Maybe it could be the time to buy. I don't know about precious. I would honestly rather own stocks than an actual individual commodity. But these commodities are not especially precious metals are a nice little defense in case there's inflation fears, war fears, end of the world fears. Physical silver. Anyway. And I heard BRICS is backing their currency on silver and gold. Gold has not done well either. Gold is ticker symbol IAU. She looks very similar to silver's chart. So, oh yeah, I meant to get to Celsius earlier. I'm so sorry I missed that one. So Celsius, this is that energy drink company. They own Alani, if you've heard of Alani. They own Celsius, of course, which is this brand right here. And they now have over a 20% smart energy drink market share. So yeah, number 3 energy drink portfolio in the US and a 20% market share in the US. So yeah, they own Alani, Rockstar Beverage as well. So Pepsi agreed to buy 7% of the company. In exchange, they do all the distribution and bottling for Celsius, and Pepsi gave them Rockstar Beverage as a gift. And even Morningstar says they're undervalued. Strategic expansion through the PepsiCo distribution partnership and demographic diversification from the Alani acquisition would drive long-term value growth despite a highly competitive environment. Energy drinks very competitive, but I see people all over my college drinking Alani's. And look at the forward PE. It's actually this is honestly cheap. They only trade at 18 times next year's net income. Or 17.9 forward PE. And it says they trade at 68 times net income right now. That's actually not true. They had a total one-time adjustment from the PepsiCo. They had a one-time termination fee moving their distribution to Pepsi. So it says they lost 61 million in net income. That was a total GAAP accounting fluke. It wasn't real. They actually made 166 million. So really, you do a forward PE, they only trade at 17.9 times forward PE. I think one of the reasons they're struggling, it might just be because all food stocks are, the whole GLP-1 weight loss prescription. Maybe people are not consuming it. Well, I don't know. Caffeine's kind of different, I don't know. Like zero sugar drinks. Anyway, interesting stock here. I actually do believe they're undervalued. Net income is about to surge to 106 mil next quarter, 107 mil the quarter after. They're going to be making over 100 mil a quarter. And I hope one day they can turn into Monster Beverage, bro. Look at Monster stock. Insane. They're at a crazy all-time high right now. The cool thing about Monster is they literally have no debt at all. Man, dude, I sell. This is why I made this portfolio. If you look in the top left, this is called my buy and never sell portfolio. My biggest regrets ever are selling great companies. I used to own a bunch of Monster stock and I sold it all for like a 30% profit. I own Palantir. I sold it at Palantir's at 123 a share. I sold all my Palantir at $8.29 for a profit. Put the L's in the chat. I mean, where's the Monster? Actually, I think I own this one on my Roth IRA. Anyway, I owned a bunch of Robinhood and some other great companies too. Like, anyway. So that's why I'm always a fan of once you're up on a stock, you can trim it. I would just barely trim it, but I wouldn't sell like a significant portion. Like Robinhood right here, I sold over 55 shares at $36 a share. Robinhood's at $92 a share. I would have made so much more money if I didn't sell it. Dave as well. I sold at $272. They're at $394. So, all right, let's look at a few more here. Then I sadly got to go. Hey, I've been streaming for like 2 hours. If you're enjoying, feel free to hit the follow button. I try and stream every day, and I literally sell nothing. I just had to ban another person with the same name and profile picture as me. I'll never follow you, DM you. This is my only account. Or I have a YouTube channel, but this is my only TikTok account. I sell nothing. Only way to learn is for free by watching the streams and my YouTube videos. You look at Opendoor, please. Yeah, that is a super bad. I've been to some Opendoors. This is a super interest rate sensitive sector, and rates are now expected to go up. And I really need to get a charger. Actually, I'm gonna go grab a charger. But dang, where's my charger? Okay, I'll show you the interest rate probability after this. But look at this right here. Look at 2023. This is when interest rates were literally zero. Everyone was buying a house. Here were quadruple, triple-digit revenue growth, up 200, up 300%, doing like $4 to $5 billion a quarter. Then, as we know, interest rates got hiked very fast, and look what that did. And literally just 1 year after, revenue's down 40, 50, 70, 60, 60%. And now it's still doing bad. It's only $720 million, down 370 or 37%. This is a big money-losing company, too. It'd be a different story if this company was kind of close to profitability, but they lost 170 mil, 1 billion last quarter. This, honestly, there's high bankruptcy risk here. I'll check the short interest. So kind of think about this logically. And this is how I like to think about stocks. The whole company's worth 3.7 billion. You could buy the whole company for 3.7 billion. You're buying a company that literally just in the past year has lost 1.2 billion. It's lost over 30% of its entire market cap just to net income. So let's check the short interest rate on this one. 17.4% of all the shares are being shorted. That doesn't just happen for no reason. There's a real bear case there. And honestly, here's the other thing. If you didn't know, literally from the FOMC dot plot, all the members have to give their projections. Did you know at the September 16th meeting, this is why all the interest rate sensitive stocks are struggling, there is a 55% chance that rates are going to get hiked by 25 basis points and a 20% chance of a 50 basis point hike. So there's over a 70% chance of interest rates going up. And as we know, Opendoor is very interest rate sensitive, like a Lowe's, a Home Depot. All these interest rate sensitive stocks are, really struggling because of this interest rate hike probability. Lennar, the biggest home builder, they are doing very bad because of this too. So real estate's one you maybe want to be cautious with right now. So, yeah. Let's see what's next here. Look at a few more. What do you think about SHAZ? I'm not sure what that is. Is that a stock? Oh, Sharon AI Holdings. So they're just worth over $1 billion. Provision of this is a GPU rental company. Okay, actually, I would not own this one. I mean, the revenue is $300,000, but what does this company do? They own a bunch of GPUs, and then they rent out the GPUs. They're just like a CoreWeave, a Nebius, an Iris Energy, and I'm really bearish on all three of those. So she would not own that one. Okay. Expand Energy. Hey, what's the ticker symbol for that? Kroger buying another store. Yeah, Kroger. Which software stocks under $20 do you like? Well, hey, The share price is always irrelevant because you can buy, fractional shares and stuff. But actually, one of my favorite software stocks I'm actually looking to buy more of is Innodata, INOD. They're down 22% the past month. They just signed Palantir agreed to spend over 50 million a year with them. Nvidia, Microsoft, Google, and Meta are all customers. 5 of the Magnificent 7 are customers. I only have 10 shares of this one, but I'm about to buy more of that one. Oh, wow. HC Healthcare is doing pretty good. This is my Roth IRA right here. It's actually, wow, it's up 3%. Despite a tech heavy bad day, Roth IRA is up 3%. It's kind of because this is a defensive Roth IRA. We got HEA, the largest non governmental hospital group, Cavco, the factory built housing. Remember how I said real estate struggling because of the interest rate sensitive? Factory built housing is actually the solution to America's housing crisis, housing affordability crisis. I like Cavco. CareTrust REIT, triple net lease, senior housing, skilled nursing facilities, specifically focusing on people with dementia. So I like the Roth IRA, but my main account is down, just went negative on the day. So like, how's the Qs doing? Yeah, Qs are only down 0.75. Oil's down 4%. That's good. Okay. Hey, what's up, Silent Cat? Good to see you. Hope everyone's having a good day. Oh, EXE stock. Expand Energy. Okay, that's the ticker symbol. Okay, let's see how they're doing. So technically they're lower than their 2022 stock price. Okay, so they're a natural gas business. So they're probably, trade like the actual commodity of natural gas, but dang. Revenue's up 100% year over year to 4.4 billion. And on that 4.4 billion, they kept 1.16 billion after tax. That's a 26% net margin. That's actually insane. Is that real? Yeah, before tax was 1.6, after tax was 1.1. That is insane. Looks like the net income is supposed to fall to 300 mil and 300 mil the quarter after, but anyway, looks like a natural gas commodity stock. And actually, data centers, what they want right now is nuclear power with natural gas as a backup. So anyway, 12 forward PE, that's normal for a commodity natural gas stock. Interesting there. Another natural gas stock would be like a Williams WMB, I really like. If I can get this to pull up. What app is that? Hey, I'm actually on a brokerage. It's just like Charles Schwab, E-Trade, Robinhood. If you'd like to get this brokerage I'm on, it's linked in bio there. It's like the link on my TikTok bio there. Or you can type it into Google, brokerage called Moomoo. But that's my affiliate link if you want to help me out. Hey, this is, this is not pre-recorded, but what's up? Actually, I'm about to end the stream. I appreciate everyone that shows up, though. Can you do Caterpillar? Yeah, Caterpillar. This is the company benefiting from the construction of data centers and the onshoring of America construction again. That was the whole point of tariffs. We're trying to bring back manufacturing to America. Let's see, is there any news? No real news on Caterpillar, but they serve so many markets. So they do, they serve the construction, constructing data centers. They also do the power and energy and the resource industry they serve. So like mining projects and stuff like that. They are a little expensive though. That's why I think they've had a little downtrend from their peak. They trade at 32 times next year's net income. That might be a slight bit pricey. So the company's crazy demand for power solutions driven by AI data centers and a robust dealer network provide structural tailwinds. Investors should remain a little cautious of the stock's premium valuation, inherent macroeconomic cyclicality, and substantial near-term margin pressures from tariff impacts. Actually, they've crushed earnings. Look at that. Wow. The orange line is what analysts expect. The blue line is what they actually report. They just beat for the past 3 quarters in a row. This is a brokerage I said. If you want to get this brokerage I'm on, it's linked in bio there. Brokerage called Moomoo. Okay, let's see. Oh, CHTR stock. What's Charter? Is that the cruise ship stock? Or I don't even know. Charter Communications. Dang, this stock is lower than their 2014 stock price. So you bought the stock a decade ago. You're a little down on your position. But they trade super cheap. They only trade at 3.4 times next year's net income. Well, let's see what they actually do. 3.4. Oh, telecom services. Okay. So, Spectrum TV, Spectrum Internet. So, that I think they trade so cheap because it's a total commodity. Anyone can. Spectrum. So, yeah. Looks like they just provide Wi-Fi and cable TV, which is kind of like a slow growing industry. Like The penetration in the US is already there. Yeah. So if you go to the revenue, like the sales, the lifeblood of the company, it's negative 1.7, negative 1, negative 2. So looks like the growth story is gone on this company. So I don't know if this is the type of stock to beat the tech heavy S&P 500, but look at that. Even though the revenue is slightly declining, they still make over 1.5 billion of net income every single quarter. So they're still a very profitable company. Just does Morningstar have to say anything? Yeah. Like cable peers, Charter's network provides an easily meet customer growing bandwidth demands. Okay, but Charter has a reputation for poor customer service. As high quality alternatives emerge, including fixed wireless and new fiber networks, customer will jump ship. Heavy debt load has limited Charter's financial flexibility. Charter is expected to slash network investments after 2027, but it will still lag fiber network capabilities. So maybe they're just being out innovated. That might be the thing. But I mean, 3 times net income, I mean, shoosh, pretty cheap. Ooh, hey, silvers. Hey, someone, hey, XY, we already looked at silver. I'm not sure what you're talking about, but if you have a stock, please give me the ticker symbol. I don't know what you're talking about there. Hey, what's up, Vega? He says he just got off work. Hey, I hope you're doing well too. So here's Broadcom right here. And thanks for everyone showing up to the YouTube and TikTok stream. I am reading both chats. We got 107 people on TikTok and 16 on YouTube. Hey, if you want to help me out, the best way to support me is watch the stream from YouTube. I'm trying to build my YouTube channel. But anyway, Broadcom, this is the TPU basically maker for Google and I believe Amazon as well. And OpenAI is making their own jalapeno chip made by Broadcom. Apple or Meta's new smart watch and smart glasses chip is being made through Broadcom. So Samsung and Broadcom signed $200 billion agreement for AI chips, memory, and foundry collaboration. Broadcom, okay, anyway. Let's look at their financials here. This is what's so impressive to me. They grow so fast. If we go to their main business, semiconductor solutions at 67% of their business, that grew 78% year over year. That is the fastest growth rate on the entire screen. Like the growth rate is re-accelerating. And look at the forecast. This is the very best part. The net income in 2 quarters is expected to be 15.4 billion. If we zoom out, the net income has never even been close to 15 billion before. This was already a record quarter, 9.3 billion. The growth is not done. So that's why we really want to value this company on a forward PE basis. You don't want to value them off the last 12 months of net income. You want to value them off next year's net income because currently they trade at 64 times net income. Notice they only trade at 30 times forward PE. It gets cut in half because the net income / EPS is literally growing over 100%. So you really want to do a PEG ratio. So they are undervalued, just like Morningstar says, I agree. Its dominant position in custom AI chips, massive impending shipments to hyperscalers, and highly sticky enterprise software, their VMware business, will drive long-term value growth. So anyway, Broadcom's pretty cool. Anyway, Broadcom, nice little dividend yield as well. All right, I'll try and find this stock. I keep asking for the ticker symbol, but he doesn't give it to me. Yeah, all right, I did. I typed in. It's not silver. It's Sivers. Oh, Sivers. Let's see if we can find that. Okay, so this. Okay, you know what? We ended up finding this one despite an ADR and a weird ticker symbol, SIEFE. We found the stock, so my apologies for delaying on that one. They're actually headquartered in Sweden, so this is a Swedish ADR stock. So we convert the currency from SEK to USD. So let's see what they do. So they do wireless and photonics. It's like most of their sales are in the UK. Then oh, that's little revenue. What's the revenue? Okay, so yeah, so 8 million of revenue. Nothing's really blowing me away here. Kind of low revenue, 8 million of revenue. Lost 5 million of net income on that. Luckily, they have a really good balance sheet, but looks like some sort of Swedish. Like, what's this wireless business? They're only okay. So yeah, they're only worth $860 million. That's such a little market cap, but that's because they only do 5 million or 8 million in revenue a quarter, and they lost 5 million net income on that. So anyway, some sort of wireless solutions helping fixed wireless 5G and 6G systems. So I don't know. Maybe they have some satellites. What they say right here. Okay, well, I have like dark mode enabled, so it makes it like impossible to read any of this stuff. So great. But anyway, nothing's really blowing me away there. Hopefully that was kind of helpful. I apologize. Is there any news? Nope, no news around that one. $800 million Swedish wireless and photonics company. Hey, what's up, OLP Papa? Dude, thanks for all those gifts there. I appreciate you. So next up, Rocket Lab. Okay, let's do Rocket Lab as like the last one. Then we'll end with a stock portfolio update. So here's Rocket Lab right here. They do a ton of acquisitions and it's been fueling growth. And Rocket Lab just secured a 266 million US Space Force contract for 12 HASTE suborbital missile defense launches. Huh. I mean, that's good news. So anyway, they have a big backlog as well. Yeah, check out the third line here. Backlog increased 20% to $2.22 billion. Launch services growing, supported by 6 completed Electron launches. But they have phenomenal growth. If you go to their main business, Space Systems, that grew 57% year over year. You know, after grew 44, after grew 94. So on a nice streak of growth. And then their launch services, the other part of their business, that grew 78% year over year. After grew 8%, after grew 66. So that's on a nice streak of growth too. The only unfortunate part is they're losing quite a bit of money. You know, they're losing like 55, 60 million a quarter. But honestly, that doesn't matter. As long as they keep growing revenue like this, like check that out. Like the revenue hits a new record every single quarter. As long as they keep growing revenue like this, it's okay for them to lose this sort of money. But it's hard. It's really expensive. Like, how do you value this one? You know, they lose 50 plus mil in net income a quarter. They lose like 70, 80 million of free cash flow a quarter. There is no forward PE. There is no free cash flow yield for me to value this one off because they're still like years away from making any profits. So that's the one thing I would be a little cautious with. And part of this revenue growth is actually inorganic. The reason, actually, I actually like Rocket Lab for doing this. What they do is they dilute the life out of the shareholder. They issue shares, dilute you, but then they go and acquire quality space companies with that money. So anyway, not one I trust a meaningful amount of money in, to be honest with you, but maybe as a fun little small position. But the net income and free cash flow do scare me a slight bit. There are some other ones that I like MDA Space has impressed me. Like I've looked at a ton of companies like ASTS Space Mobile, Rocket Lab. They're all like literally years away from profitability, like LUNR. MDA has actually been one that impresses me. They actually make net income every quarter. They're profitable. So yeah. Anyway, I also love Amazon. They're if you're looking for more satellite space plays, I mean, Amazon just application to deploy over 5,000 LEO satellites. So anyway, Amazon's great. So I'm going to end this. Thanks for being here. If you would, before you go, please leave a like on the stream. Oh, what's up, MC? Actually, he says Powell looks better at this valuation. Are you buying more? I am not buying more. I'm actually going to wait for earnings. That's on August 3rd. Yeah, the valuation's still actually a 35 forward PE, literally no debt. They just had a record their biggest order in history, a $400 million mega data center order they just got. This is the company that does the complex MEP work, mechanical, electrical work for data centers. They also do switchgear solutions for the grid. I've been very impressed. And they literally have no debt at all, get a 0.18% dividend yield. It's one of my favorite AI picks and shovels plays. So anyway, thanks for being here. Please leave a like before you go. And if you want to help me out a lot, check out my YouTube channel. Just type into YouTube Nathan Robert and you'll find it. You can replay the stream. So here's I'm going to go over all 3 of my portfolios here. I love being fully transparent. Let's start over here with my dividend only portfolio. We've actually really underperformed the market. We're only up 2.7% the past year. We're down 1.5% year to date, but I specifically only own dividend stocks in here, but mainly these are dividend growth companies. Companies like Google, United Rentals, CEG, Meta, they only have dividend yields of like 0.2, 0.4%, but I'm mainly buying them for the stock price appreciation. You know, that's where most of my money will come from. But then in 5 to 10 years from now, I think my yield on cost will be very good. And then we also have a Roth IRA. A Roth IRA is just a tax-free retirement account. You can't withdraw the money till you're 55, but you can use it if you have like a emergency medical expense, or if you've never bought a house before, you're a first-time house buyer, you can use it as a down payment, which is pretty cool. So anyway, here we kind of keep it simple. We just got 4 stocks in here. We're trying to bring the growth back. HCA Healthcare is having a nice little recovery day, so that's good to see. That one's been really beating down our Roth IRA. We started this exactly a year ago, and pretty much a year ago, and we're down 1.5% all time. In this account, we're up 27% all time in here. This has been our portfolio that's really crushed the market. From 1 year ago exactly, we're up 85%. Year to date, we're up 49% versus the S&P 500 up 9%. So this is our buy and never sell portfolio. Again, once you buy a stock in here, I literally never sell it. And Comfort Systems is like most AI stocks, again, beat down. That one's down 6%. Powell's down 6%. But then we have some defensive names like Coca-Cola Consolidated. Usually whenever AI tech stocks are doing bad, This one's doing good. It's a defensive bottler for Coca-Cola, and the main Coca-Cola mothership company just reported earnings. They're up 4.5% to an all-time high. I know Warren Buffett's happy with his Coca-Cola investment. And then finally, we have a Webull account. I know I got way too many stocks. That's the one thing. But I'm an individual stock picker. I love picking stocks. But if you're going to individually pick stocks, you got to know how to really analyze financials and fundamentals. Also, all time in here, we're only up 28% all time. You don't just want to buy any stock because it looks cool or they have a cool website. You really want to judge them and have a real fundamental basis for buying them. Check out Morningstar research and stuff, see what they have to say. But yeah, here are the stocks that we own in here. These are our biggest performers. Like AMD, yeah, AMD's down 6% on the day, but we're still up 200%. They've up 400. Clear Secure, that airport security company, is doing well on record TSA wait lines. Robinhood, Reddit. I surprisingly love Reddit. SoFi I love right now. AbbVie reports earnings on Friday. This has been that defensive healthcare dividend growth stock where I've always been saying you buy this stock, you'll get 3% of your money back in a dividend and 3 to 4% stock price appreciation on top of that dividend every year. We got Southern Company, my favorite regulated utility, gives you 7% of your money back a year. CF is my favorite commodity stock, fertilizer. Microsoft, Mueller Industries. I've been shilling Mueller Industries. I freaking love this stock. I just did a whole individual video on YouTube about this one, and it's up like 10% since the video. Microsoft's one of my favorite deals. Uber too. And actually, if you're wondering what are my very most recent stock purchases and newest stocks, actually here they are right here. It's actually Citigroup and Rollins and then Mueller Industries. So my literal most recent stock purchase I did just 2 days ago, there's the buy order, is Citigroup. This one, I just made a video about this one. You get over 2% of your money back in a dividend a year, an 11.8 forward PE. They've bought back 10% of the shares in the past year and just upped their buyback program to buy back another 15% of all the shares. So yeah, Citigroup is phenomenal. If you want to check out my most recent YouTube video, you see my analysis of them. Anyway, thanks for being here. Have a great rest of your day. Thanks for everyone on the YouTube stream. Please go, if you're on TikTok and want to help me out, it'd mean more than a donation. Just go type into YouTube Nathan Robert and hit the subscribe button to my YouTube channel. And yeah, someone said Jersey Mike's. Yeah, Jersey Mike's is about to IPO. So yeah, to be listed. Thanks again. See you soon. Hit the follow button. We stream. I try to every day. I sell nothing. I have no course book, WhatsApp. Yeah, watch out for people impersonating me. I'll never follow you, DM you. I literally sell nothing. Only thing I have is a YouTube channel and this one TikTok. I don't teach or coach, literally nothing.